today. Good to see. So, all right. And you guys can ask questions as we go. So I'm just going to start diving into all the information, take notes, ask questions, and try and absorb as much as you can. We'll save the video and you guys can rewatch it as much as you want because it's going to be a ton of info. And I'm sure it's going to take more than one watch to really get a grasp of it. But let's dive right in. So, all right. So to start out, the number one thing that everyone needs to start to realize is if you're trading and just hanging out and losing money and not really making much progress and your trades win some, they lose some, you're not really sure what's going on. The number one thing you have to start doing is every trade you make has to be made with some sort of intention. If you're just taking trades to take trades, or you open your account and you have 10 different trades open, is that me, Thana, you're talking to? Oh, okay. Okay, so everything you do has to have an intention, meaning everyone knows the only trades I really ever take are one of two trades. It's either daily oversold or TTF. I don't really do much else other than that. So basically, every trade I'm doing has one of those two intentions. It's either a daily oversold name or it's a TTF. I'm not doing trades outside of that. So I'm not getting frustrated and getting confused about why I'm entering something or what kind of trade I'm taking or what I should be looking for. You can only do so many different things at once. So what my recommendation would be, you learn one strategy for swinging, you learn one strategy for day trading, and that's really all you do. You can't learn 7 different strategies. You can't do 9 different things at once. You can't hope to hit every single thing. You can't hope to do earnings and trend trades and reversal trades and swing trades and whatever. It's just too much. So you choose 2 things that you really want to get really good at, and the rest becomes irrelevant. So like if we have an earnings play and the earnings play happens to go 1,000% because Corgi made a good earnings play and it just happened to be a really good one, I don't care because it's not something that I would have done anyway. So I don't get the FOMO of missing something that I wouldn't have been doing either way. And that helps you really focus in and narrow down what you're looking at as a trader and not really have that FOMO and like forcing yourself to do things you wouldn't otherwise do. Because I don't care about missing something that I would never have been doing in the first place. And then it doesn't take your attention away from doing the things that you should be doing. So step 1 is eliminate the noise, stop looking at things that you wouldn't have been doing anyway, and focus only on very specific things that you can hone in on and do day in and day out, and it's repeatable. So that's why I've developed these day trading and swing strategies, because that's all that I care about. I don't care about doing all that other stuff. So let's dive into the swing strategy. And the swing strategy,
Hey, Ben, I think you're mute for a second. You just got muted. Sorry.
Yeah, I got muted too.
Sorry. My bad. Playing with the...
oh,
But there you
okay,
go.
sorry, I see it. Okay, so jumping into daily oversold here. Everyone knows what that means. It's literally exactly as it sounds. You go to the daily time frame and you type in any stock you want and you look at the RSI on the daily time frame. This is the swing strategy that we do. And this is the only swing strategy that I do. All I do is I look for stocks that I'm willing to swing that are daily oversold, meaning on the 1-day time frame, the stock is RSI is below 30. And that's what indicates to me that a stock is getting towards a level that I want to buy. I will almost never buy a stock, period, unless it's daily oversold. And I don't care what stock that is. I generally don't do it because a lot of times you'll buy a stock before it gets oversold and it'll go down further. And had you just waited for it to be oversold, you would have had a much better entry. Now, it doesn't always work, because if we're in a super bullish market and a stock dips 10% that you really wanted to buy, it might never hit daily oversold. Like Nvidia hasn't been daily oversold despite having a couple dips here and there for like a year. So it's not an intermediary dip thing where like a stock can go down 5 or 10% and then you buy the dip and you're like, well, I should never have waited for daily oversold because it went up anyway. That's not the same thing. That's a whole different strategy. That's just dip buying, which anyone can do at any time. If I really want to buy something for either the long term or because I'm really confident in it that it'll reverse, that's when I start using daily oversold. So we can look at the most recent one that we looked at that happened a lot and everyone's been talking about is Netflix. And Netflix, I've already mapped this out for class here, so we can all take a look at what's going on here. Netflix has been super tricky. Netflix has gone from 133 all the way down to 70. It was at about 70 yesterday. So Netflix is a brand name. Everyone knows it. A lot of people talk about it. A lot of people trade it. Now, if you had bought Netflix and really any of the dips above like this general last level of down move, you would have lost a ton of money. Anyone getting a Netflix up here on the dip, even though this is a significant dip, unless you scalped it right over here, you lost money. Even if you bought it on the next big dip over here, again, unless you scalped it in like a 2 or 3 day time frame, you lost money. So what I do is I wait for it to get extremely oversold, which was started to happen down here. If you look at the RSI, this is the first level that Netflix really got oversold when it broke below the 30. It had one day here where it broke below, and then we could have bought it here and then sold it up here. But the real oversold for Netflix didn't start all the way until under $100 from 134. So it was down, like 25, 30% before I even considered buying it. Meanwhile, anyone who bought the dip anywhere over here is deeply red. So what I'll do is, now that Netflix is daily oversold, I'll start thinking about investing in Netflix. And now Netflix does not fall into any of the categories that I currently like for the market. It's not energy, it's not AI, it's not infrastructure, it's not material, it's not metals, it's nothing really that important to me. So Netflix is, hold on, there's a siren. Netflix is not a name that, despite the fact that it's deeply oversold, it's not a name that I'm like, oh my God, this is a opportunity that we just absolutely can't miss. It's an amazing stock. This is just something that it's such a large brand name that eventually it theoretically should bounce, but it doesn't mean that it's going to happen right away, because again, it's not a name in a particular sector that I'm overly enthused about. So what I did here, and this is exactly what I did do, I bought my first buy of Netflix around $89, and I alerted it. I said, I'm buying Netflix under 90. This was back in January, February, March. I put $2,000 in here on my first buy, which is this red line here. So this got a little complicated because there's so much here, but we'll go through it step by step. This red line here is my first buy, if you zoom in. So I bought it at $89. $2,000 at $89. Now, if Netflix turned around right here and went up 15, 20%, okay, I made 15 or 20% on $2,000 and the play is done.
Babe, this dude's daily oversold strategy is like amazing. Unreal. I'm talking about you, Ben.
Thank you. Yeah, we're gonna make sure everyone understands it as we go. So first buy right here, $2,000. Now, if Netflix falls down more, I'll look for a second buy at $2,000. So Netflix went from 89 to 83 about. So I took another buy because now we're further oversold. I doubled down at about 83. So my new average is in between the first buy here and the second buy here. So this second red line is the new average that I have. So instead of my average being $89, my average is now $86 because I have one buy at 89 and an equal buy at 82. So in between 82 and 89, it puts me at about 86. So my new average is 86. Now, Netflix continued to go down and it continued to go down. So then it got oversold again after another big drop around 76. So what I did was I doubled down yet again. So I have 2,089, I have 2,083, and I have another 4,000 at 76, which was my final buy, which puts my next average at this green line. So does everyone understand how that works? Let me just maximize this a little bit. There we go. So first buy here, second buy here, my average is here. And then my last buy was down here after another big drop of Netflix. And now it's oversold again, but there's RSI divergence forming, which is bullish. See, it's making new lows, but the RSI is making new highs, which is good. That's what I want to see. And Netflix had flattened out. So we're no longer going straight down. So I took a final buy over here, which brings my average from up here all the way down to over here. I'm still in the red, right? I'm not green over here, obviously, but my average is much closer to the bottom than my first buy, which was all the way up here. And that's because I'm adding more as we go down further. Now, if Netflix had done...
Okay, yeah, no. Yeah, we'll take them.
Oh, hold on.
All right.
I gotta mute some people. Guys, make sure your mics are off, please. Now, if Netflix had not done this, so if Netflix had not done stopped here and then bounced like that, I would have continued the process. So it could have done this, and then it could have done that. And then what would I have done? So I would have done, I'm in for 4, 5, 6, 7, 8. So I would have done $8,000 because I'm doubling up each time. Now, you don't have to double up each time. I personally like doubling up each time because it helps your average a lot. Because the more you add lower, the better your average gets. So then my average would have went from this average over here to then my new average would have been somewhere over here. So I would have, the price would have been down over here, but instead of my average being up over here, my average would have come down all the way to over here because I added $8,000 worth of shares all the way down here. Then Netflix would have went from here and done the move that I wanted like that. So there's no way to know exactly when the turnaround is going to come. But if the name is a well-known name and it's in the right sector and it's oversold enough, you guys, while I'm talking, can look through whatever charts you want to look through. It's like a 99% chance that eventually the stock will turn around if it's the right stock. Now, if it's something like obscure name that we've never heard of, and you say to me, well, look, this stock didn't turn around. Well, that's not what I'm talking about. I'm talking about decently well-known names in the right sector that are larger, well-known, established companies will almost always turn around. 99% of the time will turn around. So really what it comes down to is pacing yourself based on the amount of money you have available to follow the stock down long enough that you're still in it and your average is good enough that once it turns around, you're still in the fight and you're not down like 40%. Because if I had gone all in over here on Netflix and then it came all the way down to here, one, you'd be panicking because you'd want to stop out because you're in for too much. And two, by the time Netflix popped, you'd only be making any money above this point over here, which is a much smaller window than making money from all the way down here. So that's the two reasons why it's important to average in as slowly as possible at whatever pace makes sense to you. Now, we're already back in Netflix. So what's going on with Netflix for me currently, and let me delete some stuff here. We've already started our next play on Netflix. Now, if you notice, I'm going in for less money now than I was over here on Netflix, because if anyone remembers, why were we in Netflix over here? Because Netflix had that whole Paramount deal going on, or whatever it was. They were supposed to be buying something. And my theory was whatever ended up happening with what Netflix was planning on buying, I thought would be positive. Either the deal fell through, right, Warner Brothers. Either the deal fell through and Netflix got a free like couple $1 billion, which is what ended up happening, and that was part of this pop here, or it went through and they would have acquired that and it probably would have been positive anyway. So I was willing to go in for more money quicker on the chance that this would have happened, and then look what happened. First buy, second buy, average over here, third buy, average over here, and then Netflix eventually did exactly what I anticipated that it would do, and it went all the way from down here all the way up to here, and I was selling all up here. So this is the quintessential perfect example of a daily oversold strategy. You accumulate on the way down as it's daily oversold, and then once we get a big pop, you sell it, you sell everything. And that this was in and out for Netflix. So I had about $8,000 worth of Netflix over here, down about 10%, 10%. And then Netflix went from 77 to 100. So it popped like 40%. So I made a 30% profit margin on this play with $8,000. So it was like a nice $3,000 play. And I was nowhere even near stopping out because I could have kept averaging down way further than $8,000. $8,000 for me, it's not nothing, but it's not something where I'm like, oh my God, I have to start stopping out. Like, this is getting crazy. Maybe if I was at $8,000 over here, and then I was at $16,000 over here, and then, you know, I would gotten maybe to 30 grand, I would have probably stopped out. But that would have required Netflix to go from all the way up here, all the way down to like multi-year support at like $50 for me to have stopped out, which almost never happens. It's super rare. So now for our next Netflix play, I bought $500 on my first alert a couple days ago, which was at about 81 something. And then I alerted literally on Friday, yesterday, at open, I bought my next average on Netflix, which was right down here at whatever price that was when we opened. And so my average on Netflix is already pretty much flat. So like my average on Netflix went from $500 at $81. And then I bought another tranche of Netflix for $500 at open yesterday, which was over here, which put my average like right around here. So I'm right now, despite Netflix being down from here all the way down to here, I'm flat on it because I averaged down here. Now I'm down 0% or like 1% on Netflix, and I'm in for $1,000. So Netflix can go down from, we closed at 73.80 and I'm flat. If it goes down another 10%, which would be all the way down to like 60, that'd be $7.30 drop, which would put us around 50 or 60, what, $66, which would mean Netflix would have to drop all the way down to here. It would have to do this and go all the way down to here for me to take another buy for $1,000 because I'm already in for 1,000. So I want to double up. So I would take my next buy for 1,000 over here. And then my average would go from this red line to now somewhere closer to right there. So my new average would be right around here. So Netflix will be at $66. My average would probably be around 69. And then I'm in for $2,000 and I'm waiting for the pop. Now, if Netflix doesn't pop again and it does a little baby pop for like 4 or 5%, I'm back to flat. And then it goes all the way back down. Now I'll take my next average for $4,000 because I'm in for another $2,000. somewhere around like 55, maybe not quite that far down, like 55, right? Or 56, somewhere in that general area. And all it's going to keep doing is dragging my average down further and further and further until eventually Netflix does something like this. And then I'll take profit. So that's the entire concept of daily oversold in a nutshell. You find a stock that's oversold that we like, and you continue to average into it until it eventually turns around. The smaller you start, the safer you are, because the longer you can continue to average down. If I went in for $10,000 over here, and I already had to add another $10,000 over here, and then I had to add another $20,000 over here, well, now I'm getting into a little bit of a danger zone a lot quicker than I would have wanted to because I started so big. If you start small, you can average almost indefinitely. Netflix can fall from where we are now. Netflix can fall another 20 to 30 to even 35%, and I'm still willing to add to it. But that's only because I started so small. 500, another 500, 1,000, 2,000, 4,000, 8,000, 16,000, 32,000, et cetera, because I have such a large account. Now, if you have a smaller account, that 500, you might only want to start with 250. And then that 250 goes to 500, and then 1,000, and then et cetera. But for a stock to go down so much, that's such a well-known name that it never bounces at all, has almost never happened, which is why the strategy works. If this was something that didn't work, I wouldn't be doing it. So if you got now what we'll do is we'll take a little bit of time to look at any name anyone here has ever bought that didn't work out for them. Let's apply daily oversold to it and go over a couple examples together and how you would have done it better and not lost money. So if we want to look at Baba, correct. Baba is the other name that we're in right now. Now, Baba is having one of its biggest down moves in the history of the stock. It went from 140 to 92. It's down $50, which is equivalent to about 35% in a month and a half. And now it's deeply oversold. And we started our first buy on Baba last week. So we're already in Baba, and my average on Baba right now is 98.50. So let's put in a line, 98.50. So my average on Baba is this blue line here. Right here. Now, look at how much down Baba, look how bad Baba has been doing, but my average is so close. And I'm only in on my second buy. The RSI is over here. This is the RSI, guys. Oh, you're going to talk about someone else's question. Yeah. Okay. So I bought 500 in Baba. I think it was somewhere right around 101. And then I bought another 500 in Baba again on Friday, which was around 90. I think it was like 91 or something. Somewhere literally at open. 92 or something. So my average, again, is right in between these two buys, which is right here. So I'm only down like 3% on Baba right now. Now, if Baba doesn't bounce here and goes further down to here, I'll simply buy more. So I'll do another buy down here. So 500, 500, 1,000. We go down to here. 2,000. And again, think about it from the average perspective. My average is over here. My next buy down at 1,000. My new average would be somewhere around here. My next buy at 2,000. My new average would be somewhere around here. And all I ever need in the future of history of Baba is for it to just bounce a little bit like that at any point in the next however many weeks that we're looking at Baba. As long as it goes up 10 to 15% in the next like month or two, I will get out of Baba in the green. And however much money I manage to accumulate is how much money that I'll make based on when it turns around. So that is daily oversold in a nutshell. Let's open the floor up to questions specifically related to daily oversold or names that you've lost on that you want to look at in the context of daily oversold. So throw out some names that you guys have lost on or that you want to buy or you don't know how to buy or when to buy or what's going on, and we'll analyze it quickly in the context of daily oversold.
Ben, some people are asking about your chart layout. You could either share it or could you explain the third? The third is MACD, right?
Mac, yeah, the third one's MACD.
Yeah. Okay. Yeah, some people were asking, like, how do I set this up?
Okay, so the only thing you need for daily oversold is RSI and the daily time frame. If you're just looking at daily oversold, all you need is RSI on your chart and go and switch your chart to the daily time frame. Other than that, you don't need anything. Oh, and this is Heikinashi candles, not regular candles. So yes, the sector of the stock you're looking at is relevant. Not all stocks are created equal. A stock like Netflix and Baba, again, one of them is China, which is historically terrible, and Netflix is not in any major sector that I would consider investing in, so I'm starting smaller. When we had GEV recently, which is one of the best examples we've ever had. GEV is an AI, not only an energy play, but also an AI play because it's supplying energy to AI names. So GEV was something where if you look at GEV, it's hitting multiple sectors that I like. So I was willing to go in more on GEV quicker because I assumed due to the fact that it's in a good sector, it's going to rebound quicker than something like a Netflix or a Baba. And look at what happened. As soon as GEV hit daily oversold, the same day it hit daily oversold was the exact bottom. And I alerted GEV on this day right here. GEV subsequently ripped 30%. The best move in GEV history off of daily oversold was right here. And we caught this entire move. And why would I have started with like $2,000 here instead of like 500 like I did on Netflix? Because again, I like GEV as a stock better than Netflix. So when I'm taking a daily oversold, I consider the sector that we're taking as far as how much I want to put in immediately upon getting daily oversold. So the name you're looking at absolutely matters in the context of how much money you want to start with. See some of the questions. Right. So like someone said TSM, ASML, and MU. If any of those names go daily oversold, I'm going in for thousands immediately because those are AI infrastructure names that are highly in demand. MU was another one that we did. Look at MU daily oversold. I alerted MU daily oversold back in March at $320. Look at what happened after that. It went to $12.50 yesterday. So MU, if you bought it daily oversold, was a 4x or 3x return in 2 months. Because this is the name in the right sector at the right time at daily oversold. So I threw like $4,000 or $5,000 in right over here, and that $4,000 or $5,000 turned into 12 grand over the course of 2 months because I got in a daily oversold. And even if MU didn't bounce immediately, and I'm in for 4 grand over here, and it dipped even further, I would have done the same process. I would have added 4 grand here. I would have added 4 grand here. I would have added 8 grand down here, and MU would have eventually turned around because it's an amazing, very strong name. Daily oversold is just a way to buy the dip without exposing your entire account to being destroyed and getting in at the right time. So let's look at, yeah, exactly. All the nuclear names, someone said NNE in the chat. All the nuclear names are getting very close to daily oversold. If we get it, I will alert it and I will be buying. Now, if you look at NNE, look at the last couple times NNE has been daily oversold. NNE was daily oversold over here. I alerted it when it happened way back. It went from 24 to 38. It's a 50% gain right here. I was selling some because 50% is enough. I didn't sell all of it. Whatever I still have as an investment is back down, but that's not the issue. The play itself worked out. If you got in on daily oversold, you made 50% on NNE. Now, I don't buy any more NNE until it gets back daily oversold, which was here and here. So you can buy 500 to 1,000 over here, and then it went down to 18. You can buy another 500 to 1,000 here. It went from 1850 or whatever, 19, all the way back up to 28. That was another approximately 50% gain. So far, if you bought NNE on daily oversold anytime in the last year, you made 50% here and you made 50% here. Now, if NNE continues to go down and we get daily oversold over here, somewhere like that, and we're at about, let's say it'll probably be daily oversold by the time it hits like $17, you bet your ass I'm buying at $17. And if it hits 17 and goes right back up like the other ones did, okay, we'll make 20, 30, 40% on whatever we put in. But if it hits 17, fails to bounce and goes all the way down to 15, all I'm going to do is start adding more. I'll buy 500 over here. I'll buy 500 over here. I'll buy 1,000 over here. Eventually, NNE will turn around and I'll make 40 or 50% on it. That's the entire concept of daily oversold. And it works way more often than it doesn't. And that's simply all you can ask for in the stock market. You need a strategy that works more often than it doesn't. And if you look at any name, if we plug in any name on this chart, throw out names that you guys want to look at, and we'll pull it up real quick. We'll do about 10 minutes of that. Then you will see it works like 90% of the time. Oracle. Right? So Oracle was another one that we did. We played Oracle. So there's different levels of daily oversold that you can play. Meaning, let's say you get in Oracle over here on daily oversold, anywhere over here, you're averaging, and then it gets this like 20% pop right here. If you want to sell your whole position for 20% or whatever, or at least start scaling some out, you would have, this daily oversold, despite that it went much lower, this one worked out because you would have been getting in between 215 all the way down to 190, and it popped all the way back up to 225. So there's a large profit margin here if you're sticking to the plan, and you could take maybe like 50 or 60% of your position out, wait for the next daily oversold, get back in, and then it went from 178 all the way back up to 205. So another $30 move. Then it went all the way down to 140 back at daily oversold. And this was the big one. This one went from 140 all the way back up to 250. So that's another 50%. That's another 60 or 70% win on daily oversold on Oracle. And even if you didn't take any profit all the way up from over here, as long as you average down, you eventually would have been fine. So like, let's say your first buy was at 216. Yes, you would have had to have ridden it all the way down to 140, which is like a 30% drop, but it still worked. If you put 500 in here, you put another 500 in here, you put another 1,000 in over here, and you put 2,000 in over here, you would have had like $5,000 in, and your average would have been somewhere around here, right? But then eventually it would have ran all the way up to here. So you would have been fine. You would have made good money on that. So what's another one that people are looking at? Google. We've done Google for a while. We've done multiple attempts on, look at Google. The last one that I alerted on Google was this daily oversold here. And we made a ton of money on this one. I mean, these are all alerts that I had in my channel at the time. This isn't like me looking back and saying, oh, well, if I would have alerted here, we would have made money. No, I alerted Google. I alerted Oracle. I alerted Oklo. I alerted a bunch of other ones, SCO or oil. I alerted Nail. I mean, there's so many names that I've alerted because this is what I actually do. This is the strategy that I actually use. So software, I'm not doing. I'm not buying software. If you look at Adobe, this one really has not worked. Adobe would be a good example of one that really hasn't worked. It would work okay, but you would have had to have been extremely quick. Like if you bought daily oversold around here or around here, you would have had to have sold on this little pop right here. I'm looking for a little bit more than that. This was 405 to 460. This was about a 15% move, which is not bad. 15% is great, but you would have had to have gotten out or you would have lost the whole thing. This is a good one. So if you would have bought daily oversold and you were averaging around this area on Adobe, when it first got daily over, you bought some over here, you bought more down here and went from 340 to 420. That's a good like 20% move. So that's not bad. But then you get into a situation like this where you buy like daily oversold over here, right? And then you get this bullshit pop right here, which is only like 10% or something. And then it falls all the way back down. I don't like software. I'm not buying software. I'm not doing daily oversold on software. It's just, they're going down too much and I don't like them. Microsoft. Yeah. So Microsoft, same thing. Microsoft, as we all know, was up 6% yesterday, guys. Microsoft was up 6% just yesterday. Look at what would have happened if you bought Microsoft daily oversold on Thursday. The first day that Microsoft was daily oversold all the way from its recent high of 460 all the way down to 350. The first day that it bounced, daily oversold. So if you bought Microsoft down here, you're already up about 6%. Or if you took an option over here, you could have sold it already. You'd be up 200-300%. Just because you entered on daily oversold, nothing else. I mean, there's a double bottom here. Like there was support here to add a little more conviction, but the majority of it was daily oversold. My last alert on Microsoft, daily oversold. Right around 360, 350, or 360, 370. It ran from 360, 370 all the way to 470. We made a ton of money on Microsoft. All right, let's see some questions. No, so as far as me saying like any given daily oversold is the ultimate bottom where the downtrend has stopped, there's no way for me to know that. But what the only thing that really matters is, let's say you get like Microsoft here, this is not the ultimate bottom because we're already back at the bottom. But Microsoft ran like 25% here. So I would have suggested if you got into this Microsoft daily oversold and you were able to hit this whole move, you would have taken out at least half of your position. So you would not still be in all of your daily oversold Microsoft if you caught it over here and you ran it up to here. You'd be out. You would definitely have taken some profits. In the event, or just to prepare yourself for the contingency that Microsoft pulled this move here and went back down. Now what I'd be doing is whatever I sold on the way up, I'm rebuying down here in the hopes that Microsoft eventually pops back up. Correct. You can take you can take every daily oversold, and then once you're in the green, it's kind of up to you to then determine what you want to do with your position from there. Like, guys, you got, like, I'm only human. I can't pinpoint the exact bottom, then also predict the exact amount it's going to go up, and then also tell you exactly when to get out. That's just like a level of trading that is physically impossible. But what I can say is, if you're averaging a daily oversold, the likelihood of us to get a 10 to 15 to 20% pop is extremely high. Once we get that 15 to 20% pop, however much you want to hold or take out is up to you. But the play itself is a win. If you want to be greedy and never take any partial and only hold forever, and it continues to go up, amazing. Like Micron, right? Like Micron, the daily oversold was 300% ago. So if you would have sold all of your Micron when it was up 50%, you would have missed out on all the rest of it over here. But in the same token, if this was Microsoft and you didn't take anything out when it went up 50%, you'd be back to where you started. There's just no way to know. That's the nature of the market. Any two given plays can do two totally different results. That's why you take partials. I'm not holding all the MU I bought down here up here. In fact, I'm out most of it. I'm only in runners up here from when I bought down here. Now, if Micron comes all the way back down to daily oversold over here, I'll start buying it again in the hopes that it does this, and I'll sell a bunch of it on the way up, and I'll rinse and repeat this process forever. Okay, so other questions. Using yesterday's Microsoft example, how would you go about entering a call in terms of choosing an expiration date? So Microsoft, what I probably would have done, and this is something that we're going to start committing to more, I'm going to try and start taking options and letting you guys know how that goes. Traditionally speaking, I've only been doing shares, but it's been working so well that I will start incorporating options, and we will, as a group, learn what is the best time frame to do it. Now, Microsoft hit daily oversold. If you would have taken any option here, it would have worked. You could have done a 1 week out, a 3 week out, a 2 month out, whatever. Microsoft was up 6% yesterday. Any option you have within 2 months is up 100 to 200% or more. But what I would suggest is you do something that's at least 3 to 8 weeks out. But that also still requires you to follow the strategy of daily oversold. So let's say you buy an option over here 3 to 5 weeks out on Microsoft and it doesn't bounce. Well, guess what? Your option by the time Microsoft gets down to here is probably going to be down 50, 60, 70%. So that means you have to add an additional option down here, just like I would be buying more shares in the hope that Microsoft eventually turns around. And then your initial option will gain back some of its value, but the option down here will be up 300 or 400% if you catch the full move. So it's the same concept as shares, but you're doing it with options. So I would buy like one option over here, 2 options over here, 3 options down here, et cetera, until eventually it pops. Now, the problem with options is if it takes longer to pop than anticipated, your options will inherently lose more value than my shares will. So if I'm buying shares of Netflix and Netflix takes 2 months to turn around and I'm still in shares, but you guys bought 6 to 8 week out options and Netflix doesn't turn around, well, now all your options are going to zero while my shares are still totally fine. That's the risk of options. And there is no way for me to protect you guys from the time decay of options. It is what it is. That's part of being in options. The pop might take too long and you never make any money on the eventual reversal because it took too long. Whereas my shares, I'm still fine. I can average down on shares forever. That's why shares are safer, because I can average down for an unlimited amount of time, where options, you cannot do that. With a very small account, what would be a total position size comparison to, okay. So if you're doing daily oversold, what I would say is you should be allocating no more to the very first initial buy, you should be allocating no more than like 2.5% of your account on the first initial buy. Now, what does that mean? That means if the first buy is the only buy, yeah, unfortunately, you're not going to make a ton of money. But if the first buy is not the only buy and we get an additional like Umbaba or Netflix or Palantir or any of these names that are really getting crushed, if you get 2 or 3 buys on one of those, it means you're not bleeding any serious money because you're only in for from 2.5% of your account to 5% of your account to 10% of your account. You're still only in for 10% of your account, even though the stock has gone down another 10 or even 15% below our initial entry. So the only suggestion I can give you is the smaller you start, the lower the risk, but the lower the profit if it turns around quicker. The larger you start, the higher your risk, but the more money you make, the quicker the play turns around. That's the mathematical analysis. If you go in big to start, it's a higher risk, but a higher reward. If you go in slow to start, it's a lower risk, but a lower reward. That's just flat out what it is. Now you have to choose for yourself how quickly or how slowly you want to start averaging daily oversold. But the overall thesis of daily oversold is eventually the name that you're in will, at a 90% chance, at some point turn around if it's a good name. Every name does it. Every single name does it. I have never done daily oversold where something has not eventually turned around unless it's an absolute dog shit stock. Even Webull, which absolutely was murdering me. Let's look at Webull. Webull was daily oversold all the way at 970, all the way up here. Now, if I had done something where, and I was in this situation, so Webull was daily oversold at 970, then it went all the way down to $8. I was buying all the way down on this dip, and then look at what happened to Webull. It popped all the way up here. So it went from $8 all the way up back to 10.30, which is a $2.25 move on an $8 stock, which is like almost what, like 25%. So this over here was a perfect daily oversold play. The problem was I expected Webull to go up much more than that, and I only scaled. This is the example where people are saying, well, how much should you scale out, or should you scale out, or should you keep holding? This is the example. So I was up like 20% over here on my Webull averages on the daily oversold, but I didn't sell because I got greedy and expected Webull to go up a lot more. Now I scaled out like a third of it, and then look at what happened. It collapsed all the way back down. Then it didn't have another daily oversold bounce all the way until 450. I mean, this was just terrible. This was the disaster. So I scaled in starting at 960. I added more around 8 something. I made money. I was fully green on this bounce here, but I only took a third of it off. Then Webull falls all the way back down. Now I'm fully back to the red on Webull when it gets back down over here, and I'm still in for thousands of dollars because I was averaging from up here. Now I had to survive Webull going from an average of about 850 all the way down to 450, which is like what is that, like a 50% drop? But for some dumb reason, I had conviction in Webull that it would eventually turn around, and I continued to average. So by the time Webull got down to here, I think I was in for about, I was sending screenshots in the group. I was in for like $35,000 of garbage Webull all the way down here because this was the process, right? So 35,000. I started with 1,000. Then it went to 2,000. Then by the time we were down to like over here, it was 4,000. Then by the time it got down to here, I was in for 8,000. Then by the time it got down to here, I was in for 16,000. And then by the time it got down to here, I was in for 35,000. So that's the process. This is a real world example of an absolute disaster daily oversold. But because I started so small, I was able to get out in the green. Now I was in Webull over here, and I'm not going to say my average was like all the way down here because it just had fallen too much. My average was somewhere like all the way up over here. So I think I had like a $7 average, and Webull eventually got all the way back to 750 on $35,000. So I was green and I was up like $4,000 or $5,000 on Webull, and I sold the majority of my Webull all the way up on this run up here. And Webull has since come back down, gone back up, come back down, etc. But this is the example of if you start small enough, you almost have zero risk because you can continue to average down for almost as long as you want. Now, if I had started with like $4,000 up here, by the time I would have gotten down to here, I would be in for like 100 grand. And there's absolutely no way I would have $100,000 in Webull. I just don't care. I'm not that confident about Webull to have continued doing that. So I would have probably stopped out and taken a big loss. But because I started small and I had a decent level of confidence that Webull would eventually bounce, just because everyone talks about Webull, so many people use Webull. It's, they're removing the PDT rule. There were things going on that I figured Webull would eventually bounce, and I got out green. In the past, I would have 100% panicked and stop lost somewhere around over here when it looks like it was never going back, and I would have taken a couple $1,000 loss instead of sticking with my strategy and taking a couple $1,000 win. So that's daily oversold. The blue line was the trend line that I had established on Webull, that I was just looking for like any desperate level of signs of when it could potentially reverse. Like there was like a little downtrend over here, and then I was going to see if it ever would have hit that line, which it ended up doing exactly based on this trend over here. Now, could that have just been a coincidence? Absolutely. But I was just looking for any level of savior that like maybe there was some level of support here. Like it tapped the line here, it tapped the line here, it tapped the line here. So some level of a trend line had formed, and I was just waiting to see if this would have held up, and it ended up actually holding up. If it keeps dipping against your oversold long as you're averaging down, what's your stop risk? So my stop loss on daily oversold has to be extreme. Something has to really bad has to happen. Like I have to be in a name. Essentially, like if you're choosing the right names, for me personally, there's almost no stop out. Because the thing about daily oversold, if you're doing it properly, you're only buying names that you want, that one, you want to own anyway, and two, have a really, really good history of bouncing back. I'm never going to do the daily oversold strategy on a name that I don't want to own or doesn't have a history of turning around. So if we ever get into like a true bear market where the market drops like 40 or 50% and nothing bounces, I'm going to get hurt. Absolutely. Because I will be averaging on daily oversold until it comes to a point where the pain is just so bad and I'm down, 10 or 15 grand. And I'm just like, I can't commit any more money to this. And it is what it is. And I'll stop out. Has that happened to me in the last 5 years? No. In all honesty, it has not. I have not had a single daily oversold name go down to the level where I have been willing to stop out and take a loss on it. It just hasn't happened. And that's the hallmark of a good strategy, is like, you might not always be catching the exact bottom, but you're close enough to the bottom and you're managing your money enough that I have not taken a loss. And if we go back to my channel, there's not a single daily oversold alert so far that I've taken a loss on. And I've been alerting, we've been running this Discord now for like a year and a half. I have not taken a daily oversold loss in a year and a half. It has not happened. All the names that I'm in that I've been saying in my channel over and over are all up huge. Oil was oversold. Oil is up huge. Nail real estate was oversold. Nail is up huge. TMF, there's a million that I've done. Let me look back at my channel real quick. We did rocket. We did the space companies that all bounced. We had GDXU bounced like 40 or 50%. We're back in gold and silver. All of those have hit. Everything has hit. Dell hit. Silver hit the first time. Now we're back in silver. So silver is another one that we've restarted adding on, and I'll average down on silver as long as we have to. We're only just starting on silver. I think I'm only in for 1 or 2 buys on silver. So we have a long way to go. I'm almost 100% certain that silver will eventually turn around, that there's almost no level silver could get to that I would be willing to stop out. Because look at silver. If we look at the history of silver, this is a long-term chart of silver. Every single arrow that I have here is daily oversold of silver. All you have to do is look at the history of silver. Right? It has never in the history of the world not gone back up after being oversold. Silver, big sell-off, daily oversold over here, multi 100% run from 10 to almost 30. Go along the history of silver, daily oversold over here, get a second buy over here, and then it ripped. 15% move. Daily oversold over here, 20 to 24, 20% move. Daily oversold over here, small bounce, big move down, second buy opportunity, even a third buy opportunity, and then it went from 16 to 22. That's another 25% move. Daily oversold over here, big move up. Daily oversold over here, big move up. And then the recent ones on silver are just insane. I mean, if you bought silver on this daily oversold over here, you had silver from $27 to 110. You made 4x on your money. Now, the first time that silver's been daily oversold in a long time is all over here. So the first buy was 58. We made money on AGQ. I sold AGQ on this pop over here, which is leverage silver, and I re-entered AGQ over here. So I'm now back in silver long on daily oversold. Now, if silver breaks below this trend line and does this, everyone knows what to do. I'm going to buy more silver down here. It'll be more oversold than it was before. Then maybe it bounces. And then it goes all the way back down. And I'll buy more silver down here. I do not care. I will buy silver as far down as it goes. Silver is a true and tested commodity that has been around since all of history and has only over time gone up. Or at the very least, once it's oversold, it eventually bounces. Same thing with gold. I think this is a relatively safe play. Could silver go from 51 or 53 that it's at now all the way down to 45? Like this 43, this support area over here? Absolutely it can. Absolutely. I'm not saying that cannot happen. But if you start slow enough, it doesn't matter if it goes to 43. You're going to average down, and then it goes from 43 to 38. And you average down more. Eventually you'll hear in the news, oh my God, silver on a historic down move. Silver's down 40 or 50% from all-time high. Everyone's talking about silver, and it'll be so oversold. Eventually it'll do that. And you bet your ass I'll be in it. That's it. That's as simple as it gets. Now, if you need to tinker with the numbers and you need to figure out what's best for you so that you can stay with the move as long as you can, that's up to you. Now, I have a larger account, so I can average down for much longer than most people, but still, it still requires me to analyze the math of my account and figure out how much I want to start with. I can't start with $10,000 just because I have more money than most people. By the time it gets down to here, I'll be in for 100 grand. It's too much money. You have to figure out the exact math for your own account that if it goes down to here, how much more do I need to add? If it goes down to here, how much more do I need to add? Et cetera, et cetera, et cetera. And that's the math that you should be doing in your head. So and that's daily oversold in a nutshell. If there's any other questions on daily oversold, we'll address those before moving on to TTF. So anyone who's not crystal clear on what daily oversold is or how to do it, now is the time. Ask now. Tell me a ticker you want to review. Tell me a ticker you've lost money on. We'll look at it real quick. But other than that, I cannot be any more precise on what daily oversold is. This is the all-encompassing analysis of daily oversold strategy. And it has a 100% win rate for me. I have not ever lost on daily oversold, ever. And I've been doing this strategy for years. Yeah, Labu would have been great. So the last time Labu was daily oversold was this whole area here. So if you would have bought Labu at its last daily oversold all throughout here, you would have been in at $40 to $50, and now it's at $270, $280. So you tell me if it worked. That looks like it worked out to me. This one worked. This one went from 98 to 125. This is a 30% move over here. This one went from 83 to 102. That's a 20% move over here. Even though it looks so small, this is still a 20% move. Then you would have sold it if it hit the 50 EMA. Then you would have waited. Now, there's a situation where you might have bought Labu over here at 74, and then Trump announces his tariffs because it's daily oversold over here. Trump announces the tariffs. It goes from 74 to 32, and now you're down like 40%. But if you had averaged down on its way down over here and held it, you eventually would have gotten yourself out of it with a huge win. Like, that's what I'm saying. There's almost never a time where something will hit daily oversold and then not eventually go all the way back up. Now, this took like 6 or 7 months to fully happen, but it still worked. If you bought on the way down over here and you held it and you waited, it would have still worked. There's not a single stock that it doesn't work on. All right, so that's daily oversold, and it works out amazingly. There's certain names that I like. Everyone has my, and I'll post it one more time. I have the sector. I've posted the sectors and the names that I watch for daily oversold. Let's see if I can put it in the chat here. No, I can't. I can't put it in the Google chat. But if you go to my channel and you go to the pinned area, I have the exact names and the exact sectors that I look for daily oversold that always work, almost always work. All right, so that's daily oversold. Let's do a quick rundown on TTF, and then I will conclude my presentation. Okay, so let's see if I'm missing anything. I'll do a quick, I'll touch on macro analysis really quick. So macro analysis is, I use macro analysis in conjunction with daily oversold sometimes to try and pinpoint overall market sectors that might move. So like a rotation, like I've been on, everyone knows I've been on SEO, which means I've been shorting oil for a long time. Why was I shorting oil? Because the Iran war caused a spike in oil. Eventually, as the Iran war winded down, which is what we're seeing now, oil was going to go back down. So that's why I was on SEO. So I used daily oversold in conjunction with a macro analysis to say, I think oil eventually is going to be too overbought and it'll come back down. Now, if you don't really know about the market and you're just sitting here hoping to get alerts from us without like actually thinking for yourself, you would never have thought to connect the dots of shorting oil. That's why knowing and learning about the market is just as important as actually getting alerts. Because if you're not connecting these dots, you're going to have no idea to look for this stuff. Like shorting oil was one of the most obvious plays to me, despite everyone in the news saying, oh my God, oil's going to 1 million and we're never going to recover and the straits closed and everyone's going to be paying $200 a gallon. Obviously that wasn't going to happen. That's not how things work. Oil gets to a certain price, Trump tacos out, and oil comes back down. And that's what's happened over and over and over. And now I'm up like 30% on oil, on the oil short. And SEO is one that I've been pushing for months because I knew eventually oil was going to come back down. Nail was another one. Nail is a real estate ETF that I did daily oversold on. So we do Nail real quick. Not only is this inherently one of the best daily oversold names out there, every time it hits daily oversold, it pops every single time. Daily oversold, pop, average, big pop, daily oversold, pop. So the reason why I was alerting Nail in conjunction with it being daily oversold is because, in my personal opinion, I think rates have topped out and eventually we're going to get rate cuts. And Trump had put his new guy in the Fed that's more supposedly more dovish. Real estate does really well as rates come down. So that's why I figured that Nail was going to be a really good play, because real estate is important. Plus it was already daily oversold. So I went in over here and I'm up like 60-70% on Nail already. So that's using macro analysis to think about what's actually happening in the market and apply that to your actual strategies of how you trade. Okay, so TTF, let's go back to that real quick. So TTF, this is our day trade strategy. And it is looking at 3 separate time frames, the 1 minute, the 3 minute, and the 5 minute, to take intraday reversal trades. So if you go to SPY and you zoom in to any large move up or down, it's almost always preceded by a TTF. So you look at this big move down here, this huge move down here. It's like 200, 300, 400% on an ODT, all predicated off of a TTF, which means that the RSI was overbought or oversold 3 different time frames. So you have an overbought on the 5 minute, big move down. You have an oversold in the 5 minute, you get a big move up. You go to the next day. You have an overbought on the 5 minute, you have a big move down. Overbought on the 5 minute, big move down. Oversold on the 5 minute, big move up. And you can go back and analyze this as long as you want. Right? Oversold on the 5 minute, big move up. Now, it doesn't catch every single move in the market, but it's a good indicator of when a potential large reversal could possibly happen. And that's all it is. It's a reversal strategy. Now, it doesn't mean that it's always going to happen, because you go to a day like this, right? We were overbought on the 5 minute for hours. This whole move up here was TTF, and it didn't move down until 2 hours after we were TTF. So it took 2 hours of uptrend before finally moving down. Now, you have to analyze other factors that might lead to a potential reversal. That's where MACD comes in. That's where trend lines come in. And that's where further analysis requires when to physically get into a play. So if we look over here, look at this massive move down on the market, right? And now we want to catch a reversal because this is TTF. And everyone in chat during the day, Ben, we're TTF. Are we reversing? What do you see? When should we get calls? Blah, blah, blah. This is an everyday thing. And that's fine. I'm happy you guys ask. But now I have to say to myself, we're already TTF. What could potentially lead to a reversal? there's a few things that could potentially do it. There's trend lines that I use every day, which is this blue line here. There's RSI divergence, which is this right here. And then there's the MACD, which is this right here. In order for me to find a really good reversal that I'm willing to alert and have you guys risk your own money, because honestly, your guys' money is more important than even my money, because I don't want to lose you guys' money. That's the worst possible thing. I'm okay losing my own money, but I hate losing other people's money. I want to make sure that every potential factor for a reversal is there before I make an alert, which means there's been a trend line established, there's RSI divergence established, and the MACD has been established. And when did all these things happen? Literally right over here. And we could have taken this right here and rode this all the way back up. And that's just the TTF strategy indicating a potential reversal. MACD has to curl back upwards. So if we zoom in right here to the MACD, you see on the bottom, you guys see how all over here, as the market's tanking, the MACD is pointed downwards. It has a downward slope. I will never take a reversal attempt if the MACD is pointing the opposite direction of where we want to go. So if we're looking for a reversal up, I will never take a reversal up attempt when the MACD is down. So the MACD is down, 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 down. The first time the MACD flattened out and started pointing upwards was all the way down here. That's the first time that it did that. And look at what happened after that. That's why the MACD is important. In addition, you had RSI divergence, meaning as price went lower, RSI went higher, right? So RSI was 880 over here. But then by the time we got down here, RSI was 14, almost 15, which means the price was lower, but the RSI was higher. That's a positive development. Then you had one more move down here, and the MACD was higher yet again. Another positive development. Then the MACD went from flat to down to flat to up over in this general area. As soon as that happens, I'm willing to take a call. And then we rode that all the way up. So you had TTF, you had RSI divergence, you had a MACD curl, and you had a trend line formed where every time it hit this trend line, it bounced. So we're tanking, we're tanking, we're tanking, trend line, bounce, tanking, 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 trend line, trend line, trend line, trend line, bounce, tanking, 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 trend line, flattened out, and eventually bounced. So these are all things that I look for when looking for a reversal. Now, we've been extremely lucky in that the last, I would say 2 to 3 weeks, TTF has worked almost perfectly every single day. I don't think there's been a single day where TTF has not worked. If you've been taking TTFs for 2 or 3 weeks straight, you've only won. Now, it might not have been the first try. Like you might have had to have taken an attempt 1 or an attempt 2. But that being said, not a single day did not eventually hit TTF. So let's go to an example where TTF doesn't work. And if you have to scroll back weeks to find an example where it doesn't work, I think on my end, you have a pretty damn good strategy. Like all of these days, it would have worked. Not a single day would TTF not have worked. You got to scroll back really far to find one that didn't work. Still scrolling, still scrolling. This is a pretty bad one. We can look here. This is a bad one. All right. So now, if you just zoom out for a second and you look at this chart, look at this price action on SPY. It's essentially, not exactly, but essentially straight down all day long. We opened here and we closed all the way down here, right? So this is essentially straight down all day long. Now, we were TTF on a day like today, probably somewhere by like this point over here. So now what I would have to do is I would have to establish certain things to try and take a TTF. I'd have to establish a trend line, right? So I would do something like this. And this day I was already looking at because these arrows are already here. So we have a TTF, we have a trend line established, and we had a MACD curl. So I would have been taking all of these look decent. Like we have the trend line is being hit over and over and over and over. And where RSI divergence is formed, right? We're lower price but higher RSI, and still no V came. This was the only V that you got, which was like at best, absolute best, maybe you got like 20 or 30% here. But that being said, we're not this is not my idea of an amazing V. You know, it would have been something like that. That would have been an amazing V. So it's no strategies 100%. Like there are days where I could say to you guys, okay, like we're TTF. I'm going to look for RSI divergence. As soon as we get it, I'm taking a call. And the MACD curls, and I'm taking a call. That would have been this one right here, right? So we had a trend line. We tapped the trend line. We have RSI divergence. We have a MACD curl. And all we got was this bounce right here. That's a loss. And then again, RSI divergence, MACD curl, another loss. And then you would have had to have taken maybe another attempt over here until eventually it hit. So there's no strategy that's 100% is really all I'm getting at. But the last time that RSI or that TTF lost was the 5th, June 5th. So we've had 3 weeks of trading where TTF has not had a single day that's lost. This was the only day where TTF didn't work. Right? Because you got this bounce here, and then nothing, then nothing. We entered a new TTF down over here. And unless you caught this one for another like 30 or 40%, you lost. All this was losses. So, okay, does anyone not understand TTF? Questions on TTF? Do not understand the abbreviation, do not understand the indicators, do not understand the strategy. Now's the time to ask. All right, so we're all TTF professionals now. Everyone totally understands what TTF means. No one should be asking. All right, go back to current date. Okay, let's see. So you're looking for RSI divert. So bullish RSI divergence is simply one amongst many check marks that I'm looking for. I'm not specifically looking for RSI divergence. It's one of the factors amongst many that I'm looking for to potentially indicate a bottom. MACD flat? No. So MACD has to curl. So MACD has to go from flat to pointed upwards. So if you zoom in really tightly, right? Like on Friday, we caught this move here. So on Friday, we caught this TTF over here that even though this looks like nothing, like this move here looks like nothing, but this was like 60% on Friday. And why did I get in over here? If you look, MACD is curled upwards. We have RSI divergence. We're TTF, and there was a trend line. This blue line. Correct. 3 time frames. 1 minute, 3 minute, 5 minute. You can use the RSI on larger time frames. I mean, essentially daily oversold is just the RSI on a larger time frame. The larger the time frame, the better the move, the more oversold the stock is. No. The MACD curl and the RSI divergence is only on the 1 minute. Good question. The MACD curl and the RSI divergence are what's indicating an entry, which is on a 1 minute time frame. The TTF is indicating when a potential entry is available. That's on a 5 minute time frame, a 1 minute, 3 minute, 5 minute time frame, and then the entry you zoom into the 1 minute time frame. Okay, so Trevor, good question. So the more indexes that have a TTF, the better. So one index being TTF and the others not is not as strong as 3 indexes having TTF together. So if IWM, SPY, and QQQ are all TTF together, is a better indicator of oversold than just SPY or just Qs being TTF. Now, is there a scenario where I would be willing to take one of them if just one of them was oversold for whatever reason? Yes, it's not impossible, but again, it's just a lower conviction trade. It doesn't mean I will never do it. It just means that the possibility of the TTF not working might be slightly higher than if all 3 indexes were TTF. It's just a higher risk trade. There's nothing that might make me want to do it more than any other time. It's just me taking the trade with the assumed higher risk. Maybe I'm feeling more risky that day. Maybe I'm already in the green on the day, or I have a bunch of profits built up. So I'm willing to take that risk high earlier. Or like, let's say the setup has something really good where like Qs is double bottom TTF, but SPY is not. Well, because Qs is double bottoming in conjunction with a TTF, maybe that gives me a little bit more confidence to try just a single TTF other than a triple TTF. But that's all based on context. There's no one thing I could say that would say I'm willing to try this over this. It's all within the context of the trade. And the only day trading I'm doing is TTF. So while it might sound complicated right now if you're relatively new to it, because there's a bunch of these different terms, and there's the RSI, and there's the MACD, and there's the convergence, and whatever. It might sound complicated. The reason why it's not complicated is because this is the only strategy I do. I do not day trade unless it's TTF. So once you start learning it and repeating it and doing it over and over for hundreds and hundreds of times, it becomes less complicated. If you're doing this with like 20 other different strategies and you're jumbling all these different strategies and you're trying to figure out which one's best, and well, I want to do TTF today, but I want to do orb tomorrow, or I want to do, breakout today, or what, it's like, then it gets to be too much. You should be focusing on 1 or 2 different strategies, and that's it. No, I don't ever do TTF on individual stocks. I only do TTF on indexes. Heikinashi candles for TTF. I only trade with Heikinashi. TTF is Heikinashi and daily oversold is Heikinashi. Heikinashi is more sensitive to RSI. No, I do not look at volume in relation to TTF. If there's index level divergence, it makes things more complicated, period. Index divergence makes the TTF much more complicated and much less reliable. So if there's days where every index is doing different things, I most likely will not take TTFs, which is why I was saying triple TTF across all three indexes is a stronger reaction than one index being TTF. So you would get a situation where only one index is TTF in the event of index divergence. Index divergence can result in one or two being TTF and the third or a second not being TTF. If the indexes are not diverging, most likely all three will be TTF simultaneously. So on days where there's heavy index level divergence, I would avoid doing TTF, almost avoid trading at all, because it means the market's all over the place and there's no good trends. Which options premium? So what I would say as far as ODT, you want to do one or two strikes out. So either the closest strike or one strike out. When to exit TTF, you always take half. You take half off of TTF at the 50 EMA, no matter what. So every time we hit the 50 EMA, you're taking half of your TTF off. So let's say you got TTF on this example over here, right? We entered over somewhere between these two candles. We're ripping. We hit the 50 EMA over here. I'm already out half, if not more. 50 EMA. Correct. 50 EMA on the 1 minute. Correct, Karen. TTF is like day trading daily oversold. And then the only other thing, which is the same strategy extrapolated from daily oversold, is let's say we're doing something like we're doing TTF, and you get faked out on this move over here as a reversal, and the real reversal wasn't until over here. I would do something as follows. Let's say the market's tanking. We open, we're down, everyone's freaking out. When are we going to reverse? Are we going to reverse? What's going on? I would do two contracts over here. This one fails. We stop out. The next time it looks like it's going to turn around, three cons over here. Let's say this one goes up. It doesn't go up enough and it fails. Back to trend line. Five contracts over here until eventually it's the same concept of daily oversold. You scale in as it goes further down and eventually it'll turn around. Now, why do I do this? Because on a statistical probability level, the chance of it turning around is higher than not. For every 15 trading sessions, you might get one or two of them that's super trend, meaning it'll go like that. It almost never happens. Like just go back and back test it. Look at your charts. The probability of a day just going straight down the entire day is so low that I'm willing to risk this strategy of averaging down multiple times. Now, at some point, I'm going to stop out and I'm going to say, okay, I'm done for the day. Like, I'm not going to be down here doing 700 ODTs. I'm going to stop out somewhere around 10 or 15 contracts and I'll just say, fuck it. It might not work today. I'm done. But I've certainly had days where I took one attempt, I took two attempts, I took three attempts, and I'm like, this is terrible. I'm down $600 on the day. This TTF is never going to happen. And then it's 3:30 at the very end of the day, and you get something like this, right? You get this move right here at the very end of the day. It does happen. I mean, it's just there's no way to really know. But if you would have been trying TTF and you stuck with it and you're in for 10 contracts over here, because you've already missed for 2, you missed for 3, you missed for 5, you missed for 8, and now you're trying 10, and then this 10 attempt goes for 300%. You're still good. You're still made out good on the day. It's just up to you how many tries you're willing to do. No strategy is 100%. It's impossible. But if this strategy works more often than not, it's good enough for me. Right. So, John, that was just an example. Typically speaking, I'm waiting for RSI divergence. Like I would not have taken this attempt over here because it was too early in the day. And then this one over here, there was no RSI divergence yet. So we could have held off on that one as well until we got down to this one. Do I hold the first and second attempts? No, I stop out. Typically speaking, unless there's a reason to not stop out, if it looks like things are going against me, I'll stop out around 30% and I'll wait for the next bottom and then take another attempt. 30% is generally my ODT stop out, unless again, there's a reason. So for instance, let's say I'm looking for this reversal on this move down here. Now I get in over here because it looked like it was flattening out and going to reverse. But then I get another red candle down to here. I would not stop out here, even if I was down 30%, because we're back to the trend line and it did not break my trend line, meaning it could reverse at any time because we're still following the trend. Now, if it bounced around here and started to break below my trend line, I would have stopped out. Correct, Matthew. That's correct. It's very, very rare that I'll average down on the same contracts. It does happen, but it's rare. It's not often that I do that. I'll do it in a scenario where like it double tops or it double bottoms, but I won't do it typically. Like there are a couple times I've done it, but again, it's not often. Okay, this is a good example here, right? Let's say I got in over here on this trend line. We tried to break up and it didn't work. And then we came back down over here. And then we had RSI divergence, a trend line hit, a MACD curl, and whatnot. I would maybe average down over here because everything still looks really good. But if we were falling out the bottom and this didn't look constructive to me, I would not be averaging down like somewhere over here. I would be stopping out. But I'll average down over here because I'm only down like 15 or 10 or 15%, and it looks constructive to me. But I'm not going to average down if we're like tanking, if we're like doing something like this where we bounce around and we go like that. I'm not averaging down all the way over here. We broke the trend line. Everything is exactly the same for puts and calls, just in reverse. This one is the same thing, right? So we had a TTF up here, MACD curl, RSI divergence. Actually, no, there wasn't really any RSI divergence here. But nonetheless, you guys see the example. TTF, MACD curl down, puts. I don't know about that as far as exponential or it doesn't say. This is just RSI 14 and this is just MACD. I'm not sure about exponential or simple. The lines on the MACD are not really important. it's something called a signal line, and I forgot what the other one's called. The lines themselves are not what's important. It's what the lines are doing that's important. They have to be, the blue line has to be curled down. The blue line is the signal line, meaning that's the line that tells me what might happen next. The orange line is not really that important. Okay, yeah, whichever one is which is fine. It just matters that the blue line is either curled up or down. And you guys can go back and back test all these rules and see the results. The results are pretty astonishing. And that's why I do it. And Andrew is a deep follower of TTF. And I think he's been tracking. I think he's like 34-2 on our TTF attempts, or like 28-2 or something. So, and the overall importance of all of this, guys, is like, at least you know why I'm taking a trade. Like, we all talk about Demon during the day, and none of us have any idea why Demon is doing what he's doing. It gives us very little confidence in his trades. For me, as long as you know what we're doing and why we're doing it, one, it gives you more confidence that the trade might work out. And two, even if it doesn't work out, at least we're sticking to our rules and our trading strategy, and it just happened to not work out. It's not like we did something stupid for no reason and we lost money. You're doing something because you know what to do, when to do it, how to do it, and why to do it. It makes trading a little bit more, palatable if you're doing something based on a certain reason. Right? So okay, so that's TTF. We did daily oversold. We did I'll post the sectors that I follow again in the chat. I have it pinned in my channel if you want to take a look at which sectors work best for daily oversold. TTF is just day trading, and that's pretty much everything in that I do all day. Daily oversold and TTF. That's it. If anyone else has other questions, feel free to ask before I turn it over. But that's as in-depth an analysis as I can possibly give on the two #1 strategies that we do every single day. And now there's no question, there should be no question as to why I'm taking swings, which are daily oversold, or I'm entering puts or calls, which is based on TTF. So if I'm entering a call, you can assume it's TTF on the downside. There's MACD curl, there's some divergence, there's a trend line, there's a lot going on. If I'm taking puts, you can assume we have a TTF on the upside and we have some type of trend line and there's a lot going into it, and I'm not just doing something randomly just to do it. There's a reason why I do every single trade. If you find yourself taking trades and you don't know why you're doing them, you got to stop doing it. That's how you lose money. I mean, there's the number of times I've asked in chat, someone just said, oh, I lost money today, or I'm down big. And I'm like, well, why did you take the trade you took? And their answer is literally, I don't know. I mean, you might as well just put money in the toilet. If you don't know what you're doing or why you're doing it, you shouldn't be doing it. I know it's so easy to just press a couple buttons on your phone and next thing you know, you're in a trade or you're, buying shares or something or whatever. And then like you look back on it, you're like, I don't know why I did that. If you ever find yourself in that situation, you have to immediately quit that behavior. It's the best way to lose money in the market. Every time I find myself buying things just to buy things, I lose money. And then I go back and I'm like, well, what if I did daily oversold, or what if I did TTF? And it would have ended up being a win so many times. RSI divergence just means the price is going lower and the RSI is going higher. So if you look at this example on the chart, price is going lower, RSI is going higher. So this is RSI. it's trending higher, right? There's a low, there's a lower or a higher low and a higher low. Meanwhile, price is going lower, low, lower, low, lower, low. That's RSI divergence. And RSI divergence typically indicates loss of momentum to whatever direction it's going. And then you add in the MACD curl and you add in a trend line. And now you're looking at a multi-factor entry on a reversal. All right. All right, guys. So any last final questions? I got to take a Pornhub break after that. And we covered a lot. So I know it's a lot of information. Go back and rewatch this as many times as you need. Take notes. But this pretty much covers every possible thing you could want to do in the market. Day trading, swing trading, investing, buying dips, whatever it is. This covers it all. This is really the only strategy you need. And the beauty of it is it's a repeatable, easy to teach, and relatively easy to learn. I do not like strategies that you can't teach. If you can't teach it to someone else, it's not a good strategy. If it takes 70 different terms and you have to look at your computer with a microscope to see if it works, it's not the strategy for me. I want easily repeatable strategy where it takes like 2 or 3 indicators. It's the same setup every time. It looks identical. It behaves identical. You can do it like a mindless zombie because you've learned it, and that's it. I don't do any of these other crazy fair value, king node, whatever million different other terminologies are out there. It's just too much for me. What value do your HA candles give you? Any signals? What do you mean, what value? Like, why do I use Heikin-Ashi? Heikin-Ashi is more sensitive to RSI. So RSI might not move the same on regular candles as it does with Heikin-Ashi. And I've just over time studied both, and the Heikin-Ashi in conjunction with RSI works better. And yeah, I'm exclusively a reversal trader. I don't do breakouts. I don't do continuation. I do exclusively reversal because for me personally, I like getting in as close to the bottom or the top as I possibly can. And if it never reverses, then that's when you lose money as a reversal trader. But that being said, the number of times I've seen people say this is breaking out, or oh, this has momentum, and you get in and you're buying the top or the bottom, and then it reverses on you anyway, is very high. I've seen a ton of people say this is breaking out, let's take it here, and then the breakout fails and goes down on you, and now you're down 50-60% instantly because you're trying to catch the momentum or the breakout. I don't like breakouts. I'd rather be already in it when it's breaking out than chasing it when it's breaking out. Correct. I think breakouts are chasing. I don't like it. I don't do it. And if you guys see, I've linked my port before. Anytime and the number one thing I do, the daily oversold, is anytime there's turmoil in the market and the market's oversold, I'm loading up on stocks, and then the market turns around and I double my money because I'm investing when the market is down, not when it's up. And I've linked my retirement account. It's up like 100% in 3 years, buying the dip. I've said to everyone, when the Iran stuff was going on, I was buying the dip. When the tariff stuff was going on, I was buying the dip. I have MU shares that are up 400%. I have AMD shares that are up 400%. I have GEV shares that are up 300% because I'm buying it when they're down, not when they're up. And that to me is a safer way of investing than chasing the top. Yeah, this has been a great year for TTF, and it's been an amazing year for daily oversold. The last couple years have been amazing for daily oversold. I have not lost any money doing daily oversold at all. My account is straight up to the moon. All right. All right, guys. That's all I got. I'll let Corgi take over for a little bit. I know it's a long day of class, but the information is super important. I need you guys all to understand it and grasp it, and it'll make you much better investors in the long run. And if you have any other questions that come up, feel free to ask in the chat here. I'll still be around. I'm going to take a little drink, take a little break while Corgi takes over, and hopefully everyone got something out of this, and feel free to DM me.
Thank you, Ben.
Thanks, guys. I'm getting a little rest the throat, get a drink.
All right, to top off with that, the only thing I do is add in is my commodity channel index, CCI. Now I do have the RSI. Now I use the commodity channel index. Yes, this is for a breakout. I know people don't like breakout, but let's say you get a daily oversold on Intel, which way back, all the way back at $20, like right here is at $20, the daily oversold on Intel. Now that is back in August 2025. We are in June 2026. Now let's say you want to say, I want to play Intel. Where should I take this? Now I add this commodity channel index. What it does is it's almost identical to the RSI. As long as there's volume, there's strength, there's no weakness. Yes, it does work, but not all the time. In a bull market, this will work, and I'll show you with MU too. So look at the daily candle. So just back in 2025, in August. Now let's say it break out, and where should you buy back? Either the consolidation, but you see how it's that blue line right here. This is my CCI, commodity channel index. You will see that it's pretty much reset itself right here on the daily candle. So I'm going to buy close to here. And when it break out, you're going to make yourself, a few 30-40%. And then again, right here, it touch and retest. Like it's at the same identical at $33. All right, now let's go back to here. You can see the RSI never touched, but the CCI, it touched right here. So, the answer is you don't take intra-week or ODT. It may break out, but the chance is you need time. But if you want to get in, let's say I want to re-add on my call, I say there's still volume, still strong. It hasn't, it's not weak. So let's say I'm going to buy call at CCI right here. Same concept. It break out. And now you're not going to buy again until June 8th. Yes, you can always chase. The answer is chasing. You have to know how to stop out. Like you have to see to say, hey, is there a triple, three wife soju? Is there a consolidation candle? Let's say you buy up here. The answer is, a lot of us bought up here too. Yes, we did. And we got killed. But if you are being patient, waiting for the right moment, to say, I'm going to wait for that CCI to come back, because the RSI is going to be a very long time on the daily candle. And then see how it's like consolidation right here. In this zone, yes, it went down lower to $100 from 106. But if you bought 2 to 3 months out, even 3 months to 6 months out, at that blue line, at the commodity, CCI index, you would see that it's reset itself at this bottom. Yes, it did wick down for 1 day, for about 2 days, and then it wick back up. And now for MU, let's say everyone loves MU. the last time was back in March 2026. And how do you get buy back? Like yesterday is just a beast. Like it never touched reset. So what you do is go back to the 4-hour time frame. So let's say March 2026 when it starts first breaking out. You're gonna wait. You see how that blue line right here? April 2026, I'm gonna buy right here. And then the next time it touch is around May 15. So that is right in this area, May, in this right here. You know, same concept. Instead of having the RSI, you're gonna have the CCI. Just give you a momentum breakout. Like yes, it's chasing, but if you really want to buy this and say, I really want to play MU, where should I buy back? This is where you want to buy back. Like it touched the bottom, it's resetting itself, it's touched on the daily. I'm getting some green candle right here, and you see that there is like a trend line. Like this is a resistance, a support. So it's gonna come back down here. So it's right here. The daily, it finally hits. It's right here at 725. But there's a support right here. So you can wait for a few days, say, hey, it's gonna touch. I'm gonna take this, snap this around close to here at 685. And it does the same thing. It runs all the way up. You scale out. When do you sell then? So sell when you agree. I don't know if it's gonna hit 1,000 or 200% or 30%. The concept is if you're happy with 30%, you're never going to be ready. And now finally, on the 4-hour time frame, it's actually hit the RSI. Same thing, the RSI hit this, and the CCI went way much lower on the daily, on the 4-hour time frame. I'm sorry, not the daily, because the daily is way over, spot. You're never going to get in. So the best way you can do is the 4-hour time frame and the daily. And the 1-hour time frame is your trend line. But the 4-hour time frame is if you want to get back in and say, where am I going to get this back in? It's right here. Yes, it consolidate, it touch, see how it's always touch. But this is the support line. So the best part is just draw it out on the 4-hour time frame on a stock that has really strong momentum, find it, draw out the trend line, and say, I'm going to take it close to here, and I'm going to be patient. I'm not going to take out when it break out here. I'm going to take when it's consolidated. If you can wait 2 or 3 days, a week, you're never going to lose. And then see how it break out again. And now it's reset itself right here on June 24th. June 24th, right at the bottom of 1080. And the next day it broke out. Now the worst case, yes, it does not work all the time. Palantir is, yes, we did play this. We bought it back. I bought it back here because the daily oversold is extremely on just, back in January of 2026, which would be close to around here, which is in this territory at 129. So I know that my daily oversold is at 129, and it never touched again until June 25th. So if I was to say I missed this, entry right here, I'm going to wait until the daily oversold because this is not a strong stock. I look at the daily first. If it's a strong stock, you look at the 4-hour time frame, MU, WDC. WDC have the same formations as MU. Now, let's say I'm taking this. Yes, we lost a lot of money on Palantir. But if you bought right here with me, like right in this area, because on the daily, it went underneath. But this is also at the at the daily oversold price at 129. I think I bought it back here in May. We got the bottom of this. We took the 2027 because I don't know when it's going to break out. Yes, we chased at the top. I know that was a terrible entry because I thought it's going to create a 3 white social pattern, 3 green candles, and then a breakout. Unfortunately, it did not. It created a nasty doji candle, almost like a doji candle. But if you play the daily and say, I'm going to look and aim here, 129 to 132, it's always at that point. So you can buy anywhere close to that 130 zone, 128, 130 zone. You're not going to be you might be semi-red, but if you buy 6 months to a year out, you're going to catch that. Unfortunately, when the RSI did, I bought back here. It went for 2 days green, and then it just went down and died. So the answer is yes, the CCI does work, and the CCI do not work. You're going to have both cases. Now, WDC, same concept. This is the beast too. Like, there's no daily oversold. You're not going to get any daily oversold. You're not getting any daily commodity channel index. So how would you do that? Same thing, 4-hour time frame. So you see how it right here touched this line on the 4-hour time frame at 250. And again, right here at this date, right here, see how it pops, same thing. And then again on May 26th, this line right here went underneath. The 4-hour went underneath, and then it pops back up again. And then you wait right here on June 5th. And again on June 24th, right here, see how right here, same thing. Eventually it's going to fail, but you're going to win more than you lose. And now to go to trade SPY using the price premium. This is what I do every single day. No magic. So when I wake up, let's say I wake up today on Thursday, on Friday morning, when I wake up before the market open, all you need is 30 minutes before the market open. It's draw it out. You say, this is my, pre-market high. You don't have to be exact. Don't worry about this little wick down, because by this time it's already market's about to open. So there is no point of looking at that. So this is right here. So if 30 minutes the market close underneath this pre-market low, I'm gonna look at puts all day long, because it's gonna create a dead cross, meaning the 50 EMA is underneath the 200 EMA, meaning my white line, the 50 EMA is my orange line right here. It's underneath. When it does cross underneath, it's called a dead cross. On play small cap, it's terrible. You want the golden cross, meaning you want that 50 EMA to be above the 200 EMA. 50 EMA above the 200 EMA. That's G's 2 line. And then I'm going to go to Weibo, and I'm going to show you the price premium, and then Mama can step in and correct me if I'm wrong. So when you have this golden cross, I mean it's a bullish day. That it's above the pre-market high, pre-market low. Underneath is you take puts. You know that if you go underneath, you take puts. If it's above, semi-above, yes, you are cautious. But if it's a break above this pre-market high, you're gonna grab call. That's pretty much in a nutshell. That's all I had to do is 1 hour every day. Wake up, I draw my pre-market high, pre-market low. Underneath, I'm taking puts, and if I do take puts, I look to my left. Like, where does it go? Like, there's nothing out. There's nothing here. Meaning, if it does drop, it has to go all the way back to sometime back in the historical data. Like, this is Friday, so if it dropped underneath this pre-market low, it's gonna go to here to 725. Because I'm just gonna it's gonna perform the next resistance, and then underneath 725, it's gonna go down further. But I know that if I do take puts, that is where I sell all my puts. If I take puts, I'm not trying to take 10-20%. Yes, you can. But if let's say if I'm here, if it drop underneath 728, and if the market is really bad for that day, if I'm grabbing puts, I am not gonna sell for 10% or 20%. I know that if it does drop, it's going to go find that little support or resistance line, and it's going to go drop all the way down. Like right here, like let's say on Thursday, you know that Thursday is always, if there's a gap up, you take puts. It has 82% of the time you will win. If there's on the Thursday day, on a Thursday, if it gap up massive, like we gap up $8 on Thursday. So when it does drop, it usually fall at least halfway. But if it does drop all the way down, where is it going to bounce? It's going to find that yesterday low, or at least resistance at some point right here. So you see how it formed that little line right here at 7:30. It did drop a little bit lower, but then it bounced back up again. So all you have to do is just look to your left. If the market drop, where am I going to stop out? Like if it's like, let's say if the market break above right here, let's say on Wednesday, if the market break above, where's my resistance? It's right here. See how it never break above? You could do it in the 5 minutes, 10 minutes, doesn't, it's all the same, but it's the 15 minutes or 30 minutes. I'm just trying to show you on a bigger time frame. Like if it break out, it's going to break to this line and become resistant, and then it's going to fail. And then you can use your RS, TTF and all of that, but at least you have a concept where your stop loss, where you're taking most of your profits, you know where to aim for your puts or your call. Just look to your left. Like if I'm taking call on Wednesday, if it hits to yesterday's high, I am going to sell out 99% of all my contract, leave a runners. Just maybe it may break above, but you know that it's rarely ever does that. So it's that way. And then here's Friday. So all right. So I know that if it's going underneath, I'm going to grab puts. But if I know if it's strong, if my max 7, like just have your charts with all the max 7 open up. If all the max 7 are green, or at least 5 of them are green, the market would take off. On Friday, Apple took off. Like Apple, if you look on the 4-hour time frame with the CCI index, same concept. It did never touch the daily oversold. It never did. But at least you know that there's a support right here. You see how it's formed right here. So Apple and Microsoft was the top 2. Microsoft because of Michael Burry. I know you follow stock tweets or Twitters or Facebooks or Bloomberg. Just read the news. Some of them will give you concept, idea and say which one is going to be strong. Michael Burry on Thursday said he's no longer short in Microsoft. He's bullish on Microsoft and bullish on Palantir. He's no longer short in those 2. So those 2 are going to be on your top watch list. Because the only reason I took Apple, because it formed right here, become a support. There was news, there was talks and reports from different articles that say that Apple is going to raise the price. It's from right here, the CCI touched the bottom. So when it touched the bottom on Thursday, it has to come back up. At least. It's not going to be a full breakout. At least it's a temporary breakout. It's going to give, it may break out for like a day or 2 before it reset itself. Like see right here on June 10th, it's not daily oversold or anything like that, but you took the call right here. Let's say you grab call somewhere in just general areas candle right here at 289. You could make some money for like a week. Like I said, this is not a full breakout. It's just a temporary breakout before it retests itself at some resistance, and then it break down again. So that's the way. And now I'm going to go to the premium. Maybe Mama can correct me at any given time. So here's this Friday. I'm going to grab 735. Like this is 1 DTE. You could do ODT, but this is since I don't have the ODT chart anymore, I have the 1 DTE chart for SPY. So let's say SPY consolidate for just entire 30 minutes or right here. So this is SPY charts, and this is your price premium. I use this to to execute my play. I can just say I want to buy limit buy, meaning see SPY drop down here to 147, and then it consolidate for a very long time for 30-40 minutes. So I know that if I was to play SPY, I grab a contract, either call or puts. I don't need to be exactly at 148. I will know this is 1 DTE. So it's, if you would play 0 DTE, you will get it exactly at 148. But this is 1 DTE, so you have to give data a little room for to run. So meaning you're not going to get that 148 exactly. This is the bottom of that drop. Like you have one chart for your SPY. But this is at 148 when it dropped. Like this is the bottom, like when it dropped, 148, and then consolidate, right here. When it consolidate, break above the 20 EMA, like I'm gonna grab call. And where would you limit yourself? Like right here, that last candle is around 155. I am gonna limit buy at 155. If I don't get wick in, I don't get wick in. I just move on, because don't worry, don't FOMO. There's always going to be a chance for you to get back in, because the first drop, you are always going to miss the first action of the day. That's fine. But once it consolidates, and it's going to take a few times before it completely break out. You got at least second, third time. Don't ever FOMO. At least you got the second chance, or maybe the third chance, to say, I'm going to grab call at 155. And you limit buy at 155. When it wick you in, one wick, you're already up 180. Like it's just one candle, like just one little candle. Like let's say you wick yourself in at 155. You just limit buy, use Webull. Robinhood has the same limit buy. It's terrible, but Webull, everyone hate Webull, but at the end of the day, I use it. Mama use it. So I limit myself at 155 right here. So when I get wick in and you see two candle, I'm already up, I'm already in the green. I'm already have money. I'm already pockets at $30 per contract. And then to see how it consolidate, but at least I will not be red. I don't have to worry being so red. If it does drop underneath, I'm okay, because I'm not that super red. I can leave myself 10, 20% stop loss if I have to. Because I bought the bottom. I think I bought the bottom of this. As long as it doesn't lose underneath, just.
Yeah, I've never seen the premium chart on the desktop. Ever. I tried to open it last night. Didn't work.
Option trader. You can find, and you can add any of your stocks. It's the same thing. But I have SPY. And then I can show to you, if you want to have time, I can show to you, Mama. And then you can pick the date you like, any date you want.
Okay, so you have to pick the strike and the date on the desktop before you can see the chart, right?
Yes.
Oh, okay. I see. While we're on live and I have my monitors, laptop, and everything on charts, I use my phones for the option premiums chart.
The phone works too. I mean, the phone is faster. I know some people like the phone.
The phone is really fast. I have two phones.
Because I can do this, and I can just say I want to buy this, limit buy. I can turn on my turbo trader, and I can just place and say I want to limit buy, and I can always put my take profit as well, because I like my desktop, because I know I can set up my take profit at 30%. It automatically sell for me at 30%, 40%. I don't have to wait, because when I get wick in, I know that I'm going to be already up $40.
Okay, hold on. With Robinhood, you can't even see what price you should buy it at. I know Corgi did not use the premium chart forever, but I have used it for 4 years now, almost 5. And Robinhood, I put money in. I was like, I'll play with Robinhood. I had to take my money out of it because they have no premium chart. So with Robinhood, I was using the Webull premium chart to pick my limits, because I only limit fill. And if you're on Robinhood, you really don't know what you're just guesstimating what limit that you want to get filled at. You're guesstimating what the contract will cost when you're at a support level or resistance level, and that sucks. That's why Weeble's the best, and I hate it because it's China, but they own me. Yeah, it's very stupid. Like all the features that Robinhood has, and they don't have that. Like that's retarded. On the phone, if you're on Weeble Mobile, you literally just go to options, and when you click on a strike, the options premium chart pops up. You can add your EMAs. So I play the premium chart just like I play a daily chart, a monthly chart, a weekly chart, a 4-hour chart, it's the same thing, but I watch the 1 minute on the options if you're playing ODTE. Now, if you're looking to swing, I would look for much longer time frames. Like you can look at daily, weekly on the premium chart if you're looking to get a good limit fill for a swing. But I haven't been swinging in the last year, so I mainly just use it for all my day trades. But yeah, I would download Weeble Mobile. Don't even like open an account, put $1 in there just to use the premium chart, because it is a huge game changer. Like I'll set limits for SPX, and when they hit, my watch vibrates. I open it up on the phone. I'm green. I put a sell limit in. I put the phone away, and that's pretty much how I scalp while working all day. Oh, I switch strikes according to the price action. Yeah, I do laser in on certain strikes, especially with gamma exposure. Like if you use GEX, I even just look at the chain and I follow the chain's volume. There's no way to tell if the volume is sells or buys, but if the open interest is a much lower number than the volume, then you know that's mostly buys. No, you can limit. Yeah, you can limit sell on Robinhood, but Robinhood's great for shares.
What did
Love it. Oh, are you looking at the day feature for swings, Corgi?
Oh, sorry, I'm looking at LLY. Sorry, I haven't read any of the questions. Sorry, guys. So which one? Sorry, what question you get, Mama?
Oh no, I thought I was looking at your premium chart, and I was gonna ask you, like, have you ever used it for your swings yet?
For swing, yes, but it's better for
But I mean, but what I'm trying to say is you're not using the 1 minute
no.
on the op premium chart when you choose a strike and a price. You're using, like, you could do a 5-day. Let me see what else there is.
Like, let's say if I'm taking a swing, a really long-term swing, and I know that if hood is really strong, I will, let's say I'm taking a date a month out. Like, let's say I'm taking 2 months out, and I know that hood has been stuck in around like $90 range. And I know that, hey, if hood is around is around $100, and I think it's at my bottom of CCI. The CCI, I don't change the setting. For daily candle, I look at the CCI. It was a stock that's, I think I'm bottom fishing. It was a stock that's super strong, like MU, WDC. I have to go to the 4-hour time frame.
Okay, so just an example, right now I'm looking at Apple 350 call for October 16th. Now that's quite a ways away. If I'm looking to get into that swing, I'm not going to look at the 1 minute on the premium chart. I'm not going to look at the 1 hour. I mean, I might. I mean, you could look, whatever. I would look at the daily, honest to God. I would look at the daily. Yeah. But that helps you find your price. I can't tell you how many times when I first started trading options, I would even guesstimate what limit I wanted to buy in at and just like read immediately. There's nothing more frustrating than that.
Yeah. Like, let's say Hood had been stuck around like the $80, $85 range since June 11th. Limit contract. So I know that, let's say Hood is at, always stuck around 85 for a long time. So if I were to chase or buy just on June 11th, I know I want to get in around 220. I'm not gonna buy at 377. I want just super low. I know this is my bottom fishing. Like, I'm fishing on the daily candle. I know this 85 has been the bottom, has been stuck around here for a long time. I know that it's stuck around like to 220. So I will limit fill. I mean, not limit fill, but I will buy a little bit above this if I can get in. That would be nice. So you go to your 1 hour time frame. This is only good if it's in a bull market. Like, if it's in a bear market, none of the call will work.
But you'll look at puts. It's the same thing.
Yeah.
You look at the premium chart on the puts.
Same, you have to find that sweet spot for like Microsoft. It's been down for 14 days.
Somebody wants us to walk through the Apple example, and that's actually a really good example because there's a gap in the premium chart.
Yep. I'll 1 second. Just give me Microsoft. Let's say Microsoft was a terrible stock that you want to short this suckers down. Because puts and calls on both sides. Wow. Why is put so expensive? Oh, because it's rent so much.
When you click on a strike, your premium chart, it says order type, limit price, contracts, time in force, and above it is your. I can't put screenshots in this chat, can I? No.
So you get the bid and ask price. So this is on a Webull. Like, I use Webull. I mean, I'm not gonna. So there, I'm just showing you guys how I'm picking my price when I say I'm limit fill. Like, yes, you can get in. Like, don't FOMO, because I'm always finding the first shot. Like, I'm saying I'm limit buy at 85. I'm gonna maybe buy one contract a little bit higher, or two. Or no, I buy my 3. But when my limit fill hits, I'm in 30 contracts to 50. Like, Tofu will be in like 100 contract. And I just want, because if I find my support line, I know that's my resistance. I know some people trade with 10 contract. That's fine. Know your limit. Know what support you have. Go with 3 to 5. Be happy with what you make. Hit your daily goal and be done. Don't worry. Don't compare. You need to compare you to someone else. Don't compare. You need to hit $1,000. If you have $1,000 port, $50 should be your daily goal. Just be happy. Each $50 you add up, it's gonna add up quick.
That's 14K. That's 14K a year. 100 is 24, 248, and so on. So yeah, $50 is good. Go to Apple 350 October 16th. Do you have EMAs on your?
Yes. Yep.
Okay.
October?
Yeah. October 16th.
October 16th.
And just enlarge it. Yep.
Which contract am I looking at? Or just
350 call.
350 call. Okay.
And go to the daily. And like zoom out or just enlarge it.
Yep. Okay, there you go.
Bigger. All right. So we see, like, if you look behind where those color dots, well, I'm looking at candle shapes here. Like I see a gravestone and then a dip, and I use the same candle methodology as I do with trading with the premium chart. And the last candle you had on Friday was a hammer on this contract. It's a pretty good looking hammer too. And you have a gap. So in my mind, this contract, I like it. You know, I like it. I know it's hard to wrap your head around, but yeah, I use the same candle methodology on the premium chart. Which reminds me, I'm probably going to need glasses soon. I'm getting old. I'm telling you, man, I'm having a hard time sometimes.
So when was the last time that one hit? Was back in April 15? Around April 15. So right here at 258 at that.
I mean, like 350 is really pushing it, but
Yep.
I
So we
like
didn't-
I would buy that and trade it for a couple days. Like I wouldn't hold it. It's
But
like a
as long as you're happy with
3-day
20-30%, yep. Yep, it's the option chain. This is all option chain. This is how I figure out my limit buy on SPY. So when I play SPY, I would have two different charts. I would have my trading view that I post. So when I do say, hey, if I'm taking this call, I'm looking at my price premium on my desktop. Like I want to get limit fill on SPY. Now let's say if I play Apple, same concept, but any other thing, I want to get limit fill. Like let's say I want to play Apple when it was breaking out on that 5 minutes. I'm going to go to 5 minutes. Oof, the bid and ask what happened to this one. Oh, because of that candle. I think it's because of data. Data is never your friend. So it's spot 275. So I want to get in close to the money, 280. Yep, you want to get in the money as close as possible. Either
Yeah,
calls
you want to get in the money, if that makes sense. So you pick strikes that you believe will go in the money, not go in the money and stay in the money all day. You just want to go in the money and take your profit, and that's it. Leave your runners, which don't exist anymore lately.
No, that is a terrible spread on Apple.
Yeah.
Because
Yeah, spreads are another thing. You got to be really careful when you have a large spread and you're trying to day trade.
this must be because of that nasty candle.
Yeah, it's because of that giant. Yeah, that messed up the spread. As
So
it should. It would mess up any spread.
Because you chase, because anyone that chased at the top get killed and they get liquidated. It'll be down 50% when that red candle pops. So never chase a nasty red nasty big green candle. This is why when that Thursday, when that nasty drop, I did not want to chase any puts for that reason. Because if you chase, yes, you can make some money, but if you chase big and you lose a lot of money. Okay, I can show you charts on Tesla. Really, I can show you that.
Yeah, we can go over Microsoft when it actually works for once, because Microsoft is very trappy, and I've been trapped in it so many times when the chart looked great. I'm really glad that it worked out Friday.
So ignore all these candles, ignore all these this
Fibonacci.
is my Fibonacci at the top to that candle right there, because I know that's like you can pick it all the way down here too as well. But and let me go to a clean candle Tesla. It's cleaner. Okay. So here's Tesla on a bigger time frame. You see how there's a lot of candle over here. There's a bottom out on the CCI. It bottomed out for a few days. I'm not gonna buy some random candle where it doesn't have any support line at all. There's a lot of support right here. I see there's a support right here at least, and I see that there's a gap right here. You see that little gap on this side? It filled, but at least it's become a support. So we took call. I'm not sure why. I know Demon took puts.
I mean, I can, you can, Ben can, we can all
Oh, so
say,
you're saying,
that
we make
we
mistakes
can all
too.
explain, we can explain why we take a trade. I would love to hear why Demon takes his trades. I just want to know. Like, what does he see that makes him pick that strike, that, you know? Because I just can't figure it out.
Okay.
Demon flips the coin. He must be watching something, some kind of flow, some kind of noise. It's got to be something.
So I look at the daily to at least say if I'm taking a call, at least some support level. Yes, flow has not worked for the last few weeks. Flow has been a terrible thing, like IRDM, SMMT, and a few other one. We all get back on Yo's call, even though there was a lot of money. We got back, and Yo's whale probably lost a lot of money too. So I look at the daily. I see support like, hey, if I'm taking a call, I want to take a call at least some point, at least here. There's a lot of support. At least it's at the bottom of the CCI for me. I'm happy with that. I can risk taking it. Like it's at the bottom. Just draw the daily, and you can see at least it's at the bottom on a 4-hour time frame. It's at the bottom. But the daily is the better one. If it's a weak stock, you want to look at the daily. If it's a strong stock like WTC, so that's why I have like 387 is going to be a resistance, because if you go to your 1-hour time frame, you would see that there's a big line. Like whenever it's semi, it did break above a little, but it never seems to want to break above a lot, except for that one day. But if you stick to it, Tesla keep on dying. Like that 387.5 is a big nasty rejections, because you see it's right here, and you see it's right there. All of that line coming up. There's a lot of, so that was the puts. That 385. So you see that one? Trevor? So I know that my, at least it's come up to 387 and some change. I'm going to grab puts. And I know that my 1-hour time frame resistance, at least nasty rejection, is 387. So I go on, if I'm playing. That's why I drew it out on that day. I have like, hey, I have two lines. Like I know that I took my call and we grabbed puts. I know Matrix grabbed the puts at the very top, tippy top, at 387, some change. So if you saw that, that's like a 387 and some change. It just reject twice, double top. Whatever we say, double top or triple top, it likes to die. If it's bottom top, if it's double bottom, it likes to bounce back up. So if you're gonna play puts or call, don't look at the bigger time frame. Your daily candle. If you grab puts, just look at the 1-hour time frame. Where do you want to grab puts from? Just zoom out. Microsoft is still in that rejection. It has not fully. I don't know if it's going to fully break out. Yes, it might break out completely now that Michael Burry. But if Tesla, like this one is terrible. Like if it touched the 1-hour time frame, let it go up like $1, $2. Take puts, week out. You're gonna win until at some point, if it loses the 368, there's nothing left to hold it back down here. You have to go all the way back to at least some point over here. I mean, you have to go back to like 358. So you see it? If you can grab puts, if you play puts, if you just say, hey, the market is in a bear market, where should I grab my puts? Look at the 1 hour time frame and just zoom out and say, I'm gonna grab whenever it touches, put it in, you know, alerts to say if SPY hit if it's Tesla hit 385, I'm gonna grab puts or whatever level it hits. I'm gonna grab that because this line right here, there's 1, 2, and then the 3, 4. It's like it's become like a nasty resistance. Like it doesn't want to break above. Yes, it may break above eventually, but it needs some catalyst. It needs some news. When does support turn to resistance? When it break above on a daily, at least a 4 hour time frame, depends on what candle you're looking at. 4 hours is better. When it break above and just sit there for like a few days and consolidate, and then it might break out. But if it doesn't, at least you know that it's become a nasty rejections because, and you can see, let's say the 4 hour time frame, you can say right here, triple top. It's not a fully clean triple top, but see how it's that triple top right here? It's reject that triple top. Double, you could say this is one top, double top, it dies. Triple top, it dies again. Same concept. If it break above and sit right here for a day or two with catalyst and the news, if it break above, it's going to break above, yes, 1 hour time frame. Once it sits for the full day, like you have to wait for a few days for it to sit above. Otherwise, it's going to break above and break down again. You may have 1 day where it's kind of bounce above, maybe a exit liquidity, trapping all the late bears. But if you just keep watching it, it works. So I think Matrix grabbed the top of that line at 387. That's your perfect entry. All right. That's in a nutshell. Anyone have any questions? So when I do, I say I'm limit by, that is your perfect entry. I want you guys just to practice and say, don't FOMO and chase. There's always going to be a second chance. The market's not going anywhere. Like if early in the day and I'm grabbing call, I'm going to grab a 180, 158. I'm going to limit buy. Yes, I may take some profit right here. But if I don't, I can always, break out. Let's say if I want to, chase some call, like let's say I want to take a call again. Where should I take that? I want to grab SPY. Oh, someone asked me about why it's not 727. Because by 8 o'clock, by the time I open, I'm not going to worry the next 15 minutes, the last 15 to 30 minutes. I don't have that much. I just want to be in around 8, at 9 a.m. Eastern time. I'm just going to grab, whatever the chart is at, I'm just going to grab it at, where I see a lot of candles at 9, by 9 a.m. I'm not going to worry the last 30 minutes, what's the last, 30 minutes before the market opens going to do. There might be catalysts, like let's say CPI, PPI data. You could see a giant wick up or wick down. Ignore that. Just worry about just the main category. It's a main line that's just holding. I could say this is my top, but I could say this is my top 2 at 731. But at the end of the day, is where do you just take a line, say it's semi here. There's some little candles here, but you have to just say it's close to that line right there. That's my pre-market yesterday low as well, so I don't have to worry too much about it. And if I was to play this, I want to grab call on the 20 when it retests. I don't want to call by call when it's above here. Yes, yeah, we want to get wick in, especially when you play SPX. It's nasty, but if you can get in, I still haven't mastered the SPX yet, so I cannot talk too much except I'll let Mama explain that if she wants to, maybe a different day. I use the 20 EMA, regular, 20, 50, 100, and 200. I don't look at the 9. Mama look at the 9. I ignore the 9. The 9 is good for the 5 minutes interval.
Yeah, so the 9 on the 5 is the same as the 50. When you hear them say 50 tap, they're always watching the 1. And I'm always watching the 5 because I can trust the candles. So with the candle, you have your opening price, your closing price, and then your shadow. Shadow's referred to as the candle body.
So Mama's when she's talking about the 9, she's looking at the 5. So she want to get buy when it hits the 9. Like
Yeah, so see how whenever it gets far away from the 9, it always comes back and touches it?
You can use that for the 5 minutes, time frame. I don't look at it because it's just too much of a mess on a 1 minute interval. 1 minute. I already have enough stress on the 9. But if you play small cap, you need the 9 EMA. If you play small cap, you need the 9. Just I have to say that again. You do need that.
Yeah, you ride the 9. And you use the 9 to get in. And when you see the price getting far away from the 9, you scale out.
Yeah. So right here, do you see I'm writing this red line, my 20 EMA on SPY. This is the opposite. Remember, price premium is always the opposite of your SPY. So if you play SPY, you want to look at the 20 EMA, meaning if you're going to grab call, you grab call at this interval. So when it retests itself, you say, all right, when it at 250, I can grab call again at 250. You may not be able to catch this, but this is see how it retests itself right here again at 250. And it bounced with 1 minute candle. You just limit yourself at 250. You have 3 minutes to get in. At least you have a few minutes to get in. And say, I'm going to grab call at 250. If it wick in, you automatically always see that almost $100 in one candle. Right there. So you don't not chase on this massive green candle. You chase when it at some specific EMA. Even if you have to want to chase call, you can buy the EMA. You see how it bounced really fast. You have like 1 minute to get out. At least you'll be in the green for a few minutes. And as long as you're happy with 30%, you will never lose. And eventually, the TTF hits and we is way overbought. It has to come back down. If there's a double top for that,
So this last year, I've been just following TTF every day, and I tend to get in before. But if it doesn't work out, I'm screwed. But I am a reversal trader, but I read candles like a language. It's something that you have to teach yourself and learn over time. I would like to teach you guys 2 different candles, 2 different formations, maybe once a week, because all of it is just overload. It's way too much. Way too much.
Yeah.
But hammers don't mean as much to me on the 1 or the 3 as they do on the 5. They tell me if algos or sellers are stepping in or buyers or algos are stepping in.
So, and then if you grab call, and let's say you do say, I'm going to grab call. Where should I sell all? You either get a TTF right here above right here. I think this is where we get the TTF. But even without the TTF, you can look to your left and say, oh man, it's hidden this series. It's line right here. It become a resistance. You see how
if you're playing a breakout on the options premium chart, I mean, yeah, you could use the 9, but I really like to buy at VWAP. Sometimes, like yesterday, contracts get so, if the IV's jacked or the price action's one-sided, the EMAs and the VWAP are so far away from the price premium, you can't even use them, which sucks, which means it's just not safe. But VWAP is my favorite place to buy. Like off the open, your contracts are going to be near the EMAs, near VWAP. Later in the day, maybe not. Depends on what the price does. But off the open, when I'm on live before I leave for work, I'm always using that premium chart. I always say what price I'm looking to get in at or get wicked in at, and it's most likely VWAP.
It's not the same as VWAP on SPY charts. It's VWAP on the premium charts.
I mean, it kind of is the same, but
is,
it's
but-
not. It is, but it's not.
Yeah.
It's like the volume weighted average price of the contract, not the stock price.
Okay. But at least you can see when it does come back, if you follow the EMA, you can, scalp it really quick. But if you just want to be a patient trader, like, wait for this VWAP to hit, that it's going to hit around 227. See how there's a lot of line support. Yes, you may have to take stop loss somewhere, but at least you know that you've been grabbed in at 227. You're going to get wick in. At least you get wick in here to make money to, from 220 to 280. Same thing.
If you look at where it went below those 3 candles, that's a reversal pattern.
Yeah.
The hammer dragonflies in the middle, but you had a red hammer. And then look what happened after those 3 candles. Big bullish engulfing. What is this? Oh, you're messing with me. This is the one.
This is the one.
Yeah.
Sorry.
I mean, I guess I would trust that, but I'd be getting in and out within 3 minutes. At least with the 5, I can do like a 15-minute trade,
Yep. Here's the 5-minute charts. Here's the VWAP EMA. At least it's right there, but at least it's a candle, because the 1 minute I can see all the bottom wick. And that's where I want to get in.
You just scroll. I like it on my options chain. I have it set up where calls are on the left, puts are on the right. And I have you have to set your chain up, I believe. I don't even know what the default setting of the chain is, but you put your implied volatility on there and your Greeks, and you just scroll. And then I can also see the volume, the open interest.
Let's say you want to grab either call or puts. You can see all the Greeks at once. You can see this. Let's say you grab just, let's say 735. You would see the volume that's people are buying up right here. Open interest, what are buying, people are buying for the day today. Volume is what people have been holding for, just since yesterday. And delta is just what, for every dollar that it goes up or down, yes, is what you just make in. Same with, delta is what the daily, if it's the price stayed flat, you lose $27. And then theta is just for that, it's exponential. It eats up, Greeks eats up. Why you're not panicking is because you see that GC level of support and the options premium will go up eventually. You have to trust the charts or the volume is there, because when the volume is no longer in a bullish or bearish markets, let's say if it's a trend day, if it's a bearish day, that cost is not going to move at all. But if it's just a flat day where calls and volumes are back and forth, when there's puts and calls at the same time, that you can trust that at least there's money to move both sides, either going up or going down. But at least this way you can see how much money is being put on the call side, and then you can see on the put side too as well. This is 72,000. We know that it's right here. All right, come on, loads, three loads. Let's. So you can open up the market before figure out is it could be a call day or put day. You see that the most volume is 720. It's only 50,000 versus 70,000 on call. So meaning there's more money on the call side versus the put side. So you know that when you look for it, this might be the GACs. Someday it's gonna stick out like a sore thumb.
Yeah, I watch SPX. The first 30 minutes of SPX, I'm always staring at the volume. And there's always one put and one call that stick out. Now, some days there's not, and I know we're just gonna chop. But yeah, I mean, it lines up perfectly with the gamma exposure every time.
GC is 47,000 and 47. That's it. And now you look at the call side. This is what get open. You know what people are holding before the market open is the volume, and then open interest is what get bought up for the day.
So yeah, open interest is basically when you look at the day, you open it up, it's first thing in the morning. Open interest tells you like positions that exist. So people own this many contracts of that strike. So you do want to gravitate toward high open interest because you know you'll get good liquidity, meaning you're not going to have to lower your price in order to get out of something, you know? Like say you want to take a loss, like you want to be able to get out even, or you just know the trade's not going to work. It's some tickers with bad spreads and not high OI, like OKTA, for example, that I used to play, it's very hard to get out. But it's also hard to get in. So if you were to market fill an OKTA contract where there's like no OI, no volume, you're down like 25% instantly or 50% instant. It's that bad. So you want a decent spread, meaning bid ask is close in price, like not a massive gap between those prices. And you want to choose strikes that are liquid. So high open interest, high volume. And you know the very next day, so any of the flows that people post, like Flow God, this, that, the other, you can literally see these things on the chain and like double check them. So you can see the volume on the strike for the ticker that came up as an alert or whatever. It's right there on the chain. So what I'm trying to say is you could just be watching the chain and less of the flows. But it's good to look at flow for the next day if you trade SPY, IWM, SPX, because more often than not, there will be some strikes that stick out significantly. And if somebody, and like significantly to the point where there's so many contracts that are owned right now, the price is gonna go there at least once in the day.
So that's, and I know some of my alerts, like the price run really fast. When I do alert it, I don't know how to fix that. The answer is either you're gonna have to wait to get wick in, or you have to chase at least $5 or $10. I know on Friday I call out at 130. That was like the bottom of the wick. And the next candle, it went up to 150 within like what, a minute.
Yeah, so like open interest, gamma exposure, GEX, volume, they're all kind of entwined together.
Yep.
They're all different, but they're all the same at the same time.
Yeah. So I'll always miss the first move. I can never catch the first move. I always watch where it bottom out and where it's consolidate, and I'll grab limit buy at let's say early in the day, I'll grab 155, and then I'm done. If you decide to chase, or if you decide to buy on your own, like me, one of our friend, These guys would play 50, 60 times a day on SPY. And everyone know, I think people know me. He's a
Yeah.
silent killer. He's a sniper. He plays SPY about 60 to 80 times a day. I kid you not. Because all he does is watches. Because we use me, Mama, me, and a few others. I think Dr. Chris say he never plays SPY, but 3 of us, we play SPY every single day back in 2024, 2023. We lost a lot of money. We learned a lot. We learned a lot along the way. So
I
always
actually
try to-
did well.
Yeah.
That was a good year.
Me,
I was
I think
trading with no money at all. It was a great year.
Yeah, I think with $300. But
Yeah.
here's these. But if you can't catch, you're not good enough to catch this. But if you decide to master this and watch this, look at the candle. If it pops more than, if it's massive pops like this, like say if it pops like this, you just stop, Trevor. If it runs like 5-10% and it hasn't, like let's say I buy right at the bottom right here at 130 and it's at 140, 150. Can you chase? I'm looking for the bigger percentage wise, because right now the market is crazy. The premium is horrible. But on a normal basis, this would be, let's say this would be around $1. When it does pop, it's $1.10. $1.10 you can chase. Just watch the candle, like
Yeah, and this is where the option premium charts come into play, especially with SPX. Like that's the main thing that I scalp. And why do I scalp SPX? It's very dangerous. I don't recommend it, and it's kind of addicting. But you can, if you get your entry correct and you get wicked in, you're up $30 to $50 to $60 immediately, and you can just dump it. But I watch the premium chart more than I do the actual price action, because the price of the contract means more to me than the price of the ticker. Like, what is the contract doing? Did the contract jump too much? No, I'm not going to chase. I'm going to let it come back down. I'm going to let it decay. But yeah, I never chase, and I always try to talk people out of chasing. Yeah, I do miss out on some things, but that option premium chart is my Bible. I swear by it.
So
and
let's
it
say
works
right
best
here,
and off the open. Works best in the first few hours.
let's say I want to buy right here. Let's say it's consolidate 1, 2, 3, triple, bottom. I'm going to miss the first move. At least I'm going to watch that second and third move. I'm going to try to limit myself on the second and third move. So let's say right here is at 120, at 227. I'm going to say, hey, I'm going to look to get fill in at 227. I'm going to limit fill. I'm not going to chase at 280. I'm going to limit fill. I'm not going to, if I miss, if it runs without me. I'm going to bend and cry later. But I'm going to limit fill at 227 on the second or the third try. At least when I do limit fill and it does drop down to 210, I'm only down like 10%. I'm okay with that, because I know that at least it's triple bottom right here. It went down for like a minute, but I'll limit fill at 227. I'm gonna just say in a price, like I'm gonna limit fill right here. I missed the first move. I'm gonna put in at this price at 227. It pops a little, but let's say I missed this one. Let's say you missed the second. You could have bought back and say double, triple bottom. Yes, it does drop down underneath for like 1 minute, 2 minutes. But let's see how it bounced back up. Like let's say you bought a 227 within that one green candle, you're already up, almost 20, 30%, and then it just bounced. We never know how much it's gonna bounce. Like it's
So if you want to just keep it super simple and scalp and that's it, just use the 9 and VWAP and 5-minute candles, honestly. Or you can do, what do you use? The 50 EMA and the 1?
I used the 50. I used the 50. I trust the 50 more than the 100s. And VWAP, always VWAP. At least.
Yeah. So basically for me, a 5-minute candle close above VWAP, if we're coming from below, tells me that we are trying to break out. I've taken calls there before and gotten killed. Now you need a confirmation candle. That's why I use the 5. I can trust a confirmation candle. I can trust the candle shape, what the candle's telling me. The 1 is just someone just, it's like an auctioneer talking basically for me. I can't handle it. But like a 5-minute candle below VWAP, if the price is coming from above, and then a confirmation candle below VWAP, a full body candle close, not the wick. The wick doesn't matter. The body of the candle, the actual close. And there's even a candle counter on Webull too. So you'll know how many minutes are left in the candle, so that, you know, if the first minute of the candle, you're not going to panic and sell or whatever. Like, you could just chill and let it work out. I watch the 30-minute and the 1 hour a lot too. I always keep an eye on that. That gives me confirmation to hold or sell, or confirmation of reversal. There's been a lot of fake reversals lately because they added extra ODTE. They got rid of the PDT rule. But yeah, whenever the price action gets far away from the 9 EMA, it always comes back. And you want to know what price that option is going to be when it wicks off. That takes a lot of practice.
The blue line is the 9 EMA for the 5 minutes. If you use the 5 minutes, Mama used the 9 EMA.
Yeah.
Like, it's a personal preference. You can use the 1 minute or the 5 minutes.
You see, like, even up here, okay, so like, say this is a Head and Shoulders, you look at the second shoulder, you see how the candles start to ride under the 9 EMA? Like, that tells me we're heading down, you know? And then at the bottom there, we hit a level, we get a reversal pattern, we get a red hammer, and then we get a bullish engulfing right after. That would tell me calls. And I'd probably be out before the next 5-minute candle, before that red candle. But yeah, with 5-minute candles, scalping is, yeah, I mean, I can't scalp with 1-minute candles. I'll probably start smoking or something. I can't do it. And I'm working with live animals while I scalp.
All right, I'll send you a box of cigar. How about that?
Oh, I think I need one of those vapes with the 50 milligram juice or something.
Okay. So as you can use the 5 minutes or the, whatever your personal preference, just learn and watch the price premium.
But don't get confused. Some people use the 8 and the 20. Some people use the 9 and the 21. They are pennies difference. They don't really matter. I've always used the 9 and the 21, and I have them color coded exactly the same on my premium chart so that I can read the candles that are forming on the premium chart and understand them, and next to the EMAs and the VWAP. I read it exactly the same, no different.
Wow, push to pay. That is crazy.
Yeah.
That is that's how messed up.
So
that
we
is.
either ride the 9 EMA, we either ride above the 9 EMA or we ride below the 9 EMA. Now, sometimes we'll drop away from the 9 EMA. What's next in line? The 21. Does that respect? Does it stay? What's next behind that? My 50. So I only use the 9, the 21, the 50, and the 200. And I make the 200 very bold. My VWAP is bold. My 9 EMA is bold. I also have the 20 MA. On longer time frames, you can see when it can be 20 or 21, doesn't matter. But when the 20 MA and the EMA cross on longer time frames and there's distance between those two lines, that's a reversal signal. And on the daily also, you can see it. So yeah, I have a random moving average tied in with my EMAs. And I've tried everything. I've tried all the cool indicators, and I've back tested everything on TradingView. I actually canceled my premium membership because I just don't really use TradingView besides for long-term trending, like long-term charting. I don't really use it because I'm not going to look at TradingView when I'm on an options premium chart watching Webull trying to trade while I'm cutting dog hair. It's just not going to work. But all
And
you
then
really need is Webull. If you want to strictly just day trade, you don't really need TradingView, in my opinion.
and then I think Ben got the remember that double top, the TTF at the
Yeah,
very
that
top
was a good one.
one. Yep. That one right there, because you see, look to your left, you see how it's reject that it's become a resistance. And then it's reject, it tests it back down and went back up, but second time it double top. And if you were to say if I'm gonna grab puts, if you want to chase puts, to say I'm seeing a double top here. What is my entry?
Yeah, so if you stared at candles, and watched candles form for 5 years straight all day, you would start to understand them like a language, and you would know that the 5-minute candles are the shortest time frame that you can actually trust what the candles are telling you. Can't trust the 3 or the 1. Now, I really trust the 30 and the 1 hour. But being a day trader, I rely on the 5. And yeah, my SPX contracts fluctuate big time. I'll go down like 30, 40%. And I just try to chill. Just try to breathe.
So
Don't
theta.
touch SPX. Just master SPY first, please.
So
Don't touch
theta. So this is what effect with theta is the decay. So every dollar, everything stayed the same, you lose that value on your contract. Meaning, let's say you grab puts and you need a big move. You need a dollar move. You need a big move. Because theta, you lose $53 for every day if SPY stay flat. Like let's say the market stay flat on Monday at 7:33. You're gonna lose $53 regardless of what the market does. You lose $53 per day.
And this is exactly why you don't want to try to trade chop. Like East Coast lunch hour, for some strange reason, we've been getting like random moves here and there, but typically you're just going to end up getting chopped. The contracts are going to decay. It's much better to come back after East Coast lunch and then re-glance at the price premium chart and the volume. I keep track of the volume all day.
Correct, AK. If Apple stayed the same price as on Friday and it stayed flat, it opened
You're
flat,
red.
you're red. That is why a lot of people go out a year out, 0.08, 0.0 something. You lose like a penny, like 2 penny. So data is your worst enemy at completely.
Yeah, theta's the devil.
And then delta. So let's say if SPY open $1 low, let's say you buy 727 puts, you will make $32 if SPY drop $1, but you lose $53. So at the end of the day, you still lose money. So delta is for every dollar that the market either drop or go up or down, you make this much money. This is how much you make. Is delta. And theta is per day, price stay flat. This is how much you lose. So this is why this is why you hate to play short terms. Intra-week, you need to have news, momentum breakout. Like let's say Trump say, I'm eating up Lilly, I'm buying GLP on Lilly. You know that news will help you push it up. So it's best just day trade and get in and get out and don't hold unless you have that news momentum breakout. Otherwise, you're just gonna die. So anyone have any other questions? So same thing with puts. Let's say SPY drop a double top right here. And you want to get back in puts. Oops. Right here, I'm going to zoom out. You see that 85, yes, it did retest a few times. At double top, it's rejected. Yeah, puts didn't pay that much, but at least you make money. You make 100% on the drop. So, all right. We've been here for 2 hours. So anyone have any other questions? And, if you have questions, reach out to one of us. If you need like one-on-one, if you're too shy to talk in public, just, reach out. We will help you. The market is it's unforgiving. I don't want you guys to.
If you need help, like if you want to set up your premium chart on Webull Mobile, I can help you with that. I can't help you with the desktop though. You'll have to do that.
Yeah, if you want to learn the day trade, only 1 to 5% make money on day trade. I kid you not, only 1 to 5%. So CCI, I only use the CCI for my long-term play. Like if pick a stock, give me a stock. Let's say put. I don't know. I'm just picking a random put. So this put is never daily oversold except for this spot right here at $70, daily oversold, and never touch again. And I really want to get back into hood again. Like I love hood. I want to jump back, but it's, let's say it's never going to touch $70. I want to jump back in some point. It retest.
Yeah, hood's going to 150.
Like I see its retest here at this point.
Again.
Right here, like it tests at that 70 zone, which is also the daily oversold. I know that's my daily oversold spot is at $70 range. And where do I want to buy? Whenever it's underneath the CCI, at least it's underneath the CCI or close to the CCI. So I know it's right here. I could say I buy right here and go red. Yes, it's go red. But if I buy with 6 to 8 months out, I'll be okay. RSI is on a shorter time. It's on a longer time frame. The CCI is a shorter time frame. It's just a different oscillator. Just the technical analysis is the same thing. Because it's pretty much more volatile on the CCI. Yes, it can always go down lower because the RSI, maybe Ben can help you with this, but I think the RSI is on it's between 0 and 70. It's stuck at 70 because the CCI can go to 100. CCI seems to move a bit more. Yeah, it moves a really volatile. Yeah, thanks. Yeah, C5 for stock and options. What do you mean by that, William? Because I use the CCI if I want to get back in. Like I want to, like if I want to buy put again, I'm not gonna buy when it's above the CCI. I can't find a bottom again. I don't know when it's gonna pops. It's not safer. It's just I want to buy back. Like I want to buy. Like I missed this bottom. Like let's say I missed this. I'm gonna wait. Like let's say I'm playing MU, like MU, CCI, or WDC. See the daily oversold, it never touched. You're never gonna get any bottom except for maybe on this spot right here at 225. This was back in March. Yeah, no problem, AK. So I used a 4-hour time frame. I want to get back in. I want to buy MU. I want to chase MU. See how the RSI never touch at all. So I look at the CCI. I want to get back in. I want to chase MU. I want to know where can I buy MU again. So when it touched on a 4-hour time frame, I know it's touched right here. So I'm going to limit buy close to here. Yep, I want to buy here, and then I want to buy back here again, right here at $500, and again right here at maybe at same thing at $500, and then right over here at 664. It went up 7, right here, 730. So there you go. So that's between the CCI and RSI. The RSI is on a bigger time frame. CCI, you get really volatile. It's almost to 100. It's dances like Palantir back everyone. I kid you not. That was the nasty one. I thought I just nailed the bottom on a retest right here. Like right here. It did for one day, it bounced, and then it dies nastier than anything. What expiration would your option be? 1 month out, 6 months? Save William on RSI on the daily oversold. With news, you could do 1 month to maybe 8 weeks to 3 months out. 2 weeks to a month, 3 months out. If you're bottom fishings, you don't know where to buy, like the breakout, like MU or WDC, any of your stocks, right here, you know that this is a really strong stock. You want to take 2 to 3 weeks out. You want to get in and out, and you run because you are already way overbought. But if you buy even with 2 to 3 weeks, 2 to 4 weeks out, you are still taking your profit at 30% and leave runners. You can't hoping to get 1,000 on full port. That just not happen. So it's tough for a small port. The small port, I would just highly recommend just play TTF. At least you're gonna win 80 to 90% of the time. Same size, you're gonna win more than you lose. I hate 0DT. I always say I hate 0DTE, but it's the only one that I have higher hit rate. Indicator, it's just a CCI, nothing special. There's no special. It's just the basic one. I'm not using anything else. I'm not using just static. I'm just using the commodity channel index, just the basic. So if you can't day trade, I know it's tough, but if you do have some time, just join live with us, or I would try to post more alerts on the channel again. Take a few plays. If you can make money 30%, 40%, hit your daily goal, run away. Be done for the day. Don't overtrade. Okay. Anyone any other questions? I think people are leaving already. It's been 2 hours. Going once. Going twice. All right. Have a good weekend, everyone.